What's up, guys? I am really excited to take you through a full year and a half long case study. We actually got challenged. I was actually on a podcast about a year and a half ago, and somebody was telling me that the short-term rental game was over, interest rates were too high, prices were too high, markets were too saturated, and specifically called out a market and acted like that you couldn't make money anymore in that market. And I disagreed with him on the podcast. And we went back and forth for a minute, and I got off the podcast and I kind of felt like, I'm going to put my money where my mouth is, and I'm going to actually document a case study of me going and buying a property, paying high interest rates, high prices, very saturated market, and taking it through a very, very public, okay, here's what I plan on doing, here's what my projections are, and we documented it for an entire year. This is the end of that year. I started that process. We launched this property in December 9th of 2022. It's now December 12th of 2023. And so we've got our full year-long case study done, and we actually became the #1 revenue property in our market. And so I'm excited mostly as this intro to the case study, because this case study was actually recorded a year ago, right after I launched the property, showing you exactly what we did, how we chose the market, how we chose the property, what was important to us, how we underwrote the property. You're going to be able to see how close we were to our projections a year ago to what we actually achieved right now today. The numbers are in right now. And so our numbers, actually, I'll read them to you. We ended up being the #1 grossing property in the market. We ended up having a total gross revenue of $130,381. Our total cost on that property, our down payment was $160,000. Total furnishing cost was $76,000. Our closing cost, inspections, $26,000. So we had a total capital outlay of $262,100. And so decent amount of money in. What was our return on that investment after debt service of $49,000 in change, after our management fees of a little over $26,000, our expenses on that property, insurance, and our property expenses of a little over $15,000. Our total net income was just over $39,000. So our cash on cash return, 14.8% year one cash on cash return, the #1 property in the market. The reason I tell you this is I want you to watch the case study that was done over a year ago. Again, we were very, very public with this case study, and because we wanted to put our money where our mouth is. We know the process that it takes to buy a property, operate way above the averages, set yourself apart, operate in the top of the market. And I always tell people it's easier to operate in the top of the market than it is in the middle of the market, especially in these crowded markets. And so I take you step by step through. I did this training and case study inside of our paid mastermind group. So you're going to see questions along the way. It was a live training. I have questions that come in along the way. Many of the same questions maybe you might have. And so as an intro now, I've had that case study up for a long time, but now we want to see the results. And we're going to show you these results. I'll post these results so you see them. I want you to see how close we were to our projections, to the actuals when they did come in. Go check out AirDNA. We are the #1 grossing property on AirDNA right now in that market. So you'll have a chance to find out what that market is, where we're at, how we ranked, how we did compared to our projections, and then exactly what it took to get there. I take you through the step-by-step process that we take to how do we select the right properties in the right locations? What do we do to set them up to create a unique experience for our target audience? How are we able to set up the management to deliver that experience to our audience so that they have an amazing 5-star experience, where we become one of the top properties and the top reviewed properties and 5-star experience across the board? And then ultimately, what did we do during the year to market that property, specifically with our direct bookings? Of our $130,000 of gross revenue, over $37,000 was direct bookings that we generated ourselves through Facebook ads. I'm going to show you that in the case study so that you can see exactly what it takes. You can reverse engineer exactly what I did so that you can see exactly what we did to become one of the top properties, and realize that it's not a complicated process. There is a blueprint. There is a plan and a process you can follow to operate at the top of the market. We've been talking about this for a long time, and I'm really, really excited. Mostly, maybe a little bit relieved that actually we put our money where our mouth was, and the results came in at or above what we actually projected. Go check out what we projected. You'll be shocked at how close we were a year ago to what we actually came in at. And so I'm excited for you to watch it. Mostly, I'm excited for you to learn the steps it takes to operate at the top of the market. So many people always ask, well, yeah, but if you stack all of these different things that we teach and all these different things that we talk about on a regular basis, it is very predictable that you will be operating toward the top of your market and really creating that lifestyle and financial freedom that you want to with this asset class. So without further ado, I'm going to go rewind the clock now to over a year ago when I was talking about this, going through this live case study so that you can check out what it took for us to be able to actually achieve the #1 grossing property in our market of Cherry Log, Georgia. I hope you enjoy. What's up, guys? Welcome to our weekly coaching call. And today we're going to dive into a full-length case study. So I appreciate you joining me. We're going to dive in. Let me get everybody admitted and joined. So those of you that do have questions outside of the case study, email them in. We'll make sure we get them answered. I do have a few that I have not answered yet. So if you're waiting for a question to be answered, we're going to make sure that we take care of that. But I want to get through this case study with you. We're going to be recording this so you can go review it again, go look at it. But really, I'm taking you through the entire step-by-step process that we teach you inside of the masterclass. And I'm going to take you through each of the 9 steps and how I went through this process myself on a recent acquisition, my most recent acquisition. And so we are going to dive into that. So those of you, go ahead. The way that we're going to do questions, and I will answer questions along the way. Let's try to keep them about what we're talking about in the case study so that we are going to record this so we can go review it again and it stays very relevant to the case study that we're diving into. But go ahead and raise your hand and I'll clear hands. And what I'll do is at each kind of step, I'll kind of go through and answer any questions. And then obviously at the end, we'll wrap up questions and anything that we need to do there. So we got a bunch of people jumping on, a little bit more than normal, which I anticipated. I'm really excited to go through this with you all. So in the meantime, everybody keep yourself on mute so that we don't have any background noise, and we'll get started. So I'm going to, let me share my screen and walk through this process with you and kind of take you through the process that I went through. And what was difficult for me, or not, I shouldn't say difficult, but I'm going to go through what I was doing to plan out what I was actually going to do. Like I had to decide on this property. One of the hard things for me is a lot of my properties, you guys, I've had for a while and they've been established and they're already operating. And in fact, I've got a couple properties that don't even have websites because we have a customer base and we have repeat customers. And so those are all great things, but sometimes that's hard to show you as an example of what we do. But it's also important for you to know that we're still in this game. And so we're always in the game, adding more properties to our portfolio on a regular basis. Last year, we bought 3 different properties. This is the last one I bought. 2 of my properties were almost not like guaranteed to be home runs. I bought them at a really good deal. I found a market that had a really good income potential. And so this one, I like kind of mid last year, I started going through this planning stage and I thought, okay, for me, I wanted to test out if what I actually teach works and it wasn't dependent on the market or the property or the wave that everybody was riding. And so as I go through this, some of you are going to look at this and think to yourself, I might not have bought that property. And I don't blame you. It was a little bit riskier to buy the property that we bought because of the numbers. But it's important for you to see the entire process and why my property goals for this property made a big difference in what we were deciding to do. And so as I was going through this and deciding, okay, I needed to find a market that was really saturated, pretty crowded, very popular. Prices had skyrocketed over the last couple of years where prices went up faster than revenue went up in this market. And so I was looking at a number of different markets. They were the major markets that some of you are familiar with. I looked at some markets out west, closer to where I'm at here in the mountains out west, because those markets were, harder to make work. I looked at the Smokies, Gatlinburg, Pigeon Forge, some of those markets to try to find. And so I was kind of looking at a couple different markets simultaneously. And then I was looking in this area, which is North Georgia, Blue Ridge Mountain area of Georgia. That's where we ultimately ended up purchasing. But we narrowed it down to about 3 different markets, and we were looking at the potential of some of these properties. Well, in these markets, some of you ask how important is location. For us, my property goals for this property, I didn't want one of the big, huge properties. I was looking for a 3-bedroom property in all 3 of these markets I was kind of analyzing at the time. And then I also wanted it to have or be on water. So I was looking for lakes, rivers, different things like that in all of these areas that we were analyzing. So that actually made them a little bit more expensive, right? I also felt like that long term, that's what I wanted in my portfolio. Love the water, love being on the water, but also it didn't necessarily always jump our revenue significantly, but we also felt like we could create a little bit more of an experience that we were trying to create. So ultimately, I'm going to show you, I went through this process. We decided on those 3 markets, went through our property goals. And I tell you this because as many of you, I know a lot of you are going through this process. Some of you, I hope, my goal for this is for those of you that are brand new, kind of going through this process, you get a little bit of a preview of what you're in for with the whole process kind of put together of what it actually looks like. Those of you that have been through this process and done this already, maybe you look back and say, man, I missed that step. What I always tell people, success in this game really matters. It's a whole bunch of little things stacked on each other. There's a whole bunch of little things that you do right to help you have overall success in this game. And so I want you to keep that in the back of your mind. Many of you say, hey, I already did that, or I'm doing this right. And we look, and I always point somebody back to the masterclass and say, did you actually go through that process? Because this is the process we followed to a T. When I went through this on this property, I went through every single step and I followed exactly what I teach. And so that we could say, did this work? What were the sticking points? Like, we wanted to have a very relevant case study for what we're doing in today's market. This was also during the time when interest rates started shooting up significantly, when a lot of DSCR lenders started to pull out of the game. So there was a lot of challenges on the front end. And I want you to think, and I want you to know that there's always challenges in every deal as well. And I want to share those with you. So I went through, made the decisions in my plan and understand phase, made a decision on the location that we were going to go after and what we were going to actually identify. At the time, I was looking at 3 markets simultaneously. It took me, we made during this time from about June, we started the process in about late April, May, and then all of June we started. So 2 full months of really looking and making offers. And while we were doing that, I lost out on a lot of offers. And while we were doing that, though, rates were going up. When I started the process, I was underwriting deals at like 4.5%. Ultimately, I ended up getting a 6.78% loan. So it was almost 7% loan. So it's really frustrating during that time to watch rates just creep up every time I'm losing out on offers and we're not getting properties, we're not seeing properties, and just staying patient based on our property goals. Ultimately, we found this property at the end of June. And we were able to, or excuse me, at the end of May, made an offer on it. We closed the end of June. And so I also had one of my lenders pull the rug out from under us kind of last second and say, we're not comfortable with the short-term rental game right now because rates are going up like crazy. We don't know what's going on with all these rate hikes. And so that was really a frustrating part of the process. So we ended up going to one of our other preferred lenders. We ended up using Templeview Capital, one of our DSCR lenders in there that we recommend. And those of you that are unfamiliar with where our recommended partner section is, right at the end of the masterclass here, when you click on finance partners, realtor partners, CPAs, tax advisors, all these partners that we use, I used all of them along the way, right? And so one of them was our finance partner. We ended up closing with Templeview Capital. Right now, they don't like short-term rentals as much as some of the other DSCR lenders. And so we list the ones that are relevant at the time. So always double check that. Going back to the location. So we went and filled out our location. We ended up making an offer on this property. But what I first want to share with you is what the location numbers looked like. So this property, this is in Cherry Log, Georgia. We were analyzing the 3-bedroom, 3-bath. This is actually, I just ran this, but the numbers were very similar back in May, June when we did it. So I actually didn't save the one that we had. The numbers were actually very similar. They showed a little bit higher, but not overall, not very different. They were a little bit closer to these 24-month averages. So you can see average nightly rate from about 200 to 430 toward the top end. Average revenue on this property in this market was, in the budget side, about $40,000 gross revenue up to about $90,000 gross revenue. So when I was looking, most of the properties I was making offers on were 750 to 900. So when you see what we're looking at, you guys know my 10% rule is you have to make about 10% of your acquisition price in gross revenue in order to break even. And so right out of the gate, I have to operate toward the top of the market in order to really make this make sense for us. And so that's challenging. Sometimes when you guys send over property reviews for Jacob and I to look at, we will always, if you have to operate toward the top of a market to make any money, we always have a little pause for you. And so for me, I've been doing this for a long time, so my portfolio and my decisions might be a little bit different. So I always want to make a note of that as you're listening to this. But this was definitely not a home run based on the acquisition costs that we were looking at in that 7 to 9 range. So properties had just skyrocketed in cost, and the revenue had not gone up nearly as fast as the market revenues. So is the acquisition cost. So ultimately, market looks good. It's an active market, a decent number of properties, but it's not. The revenue's not showing me, okay, like I'll show you this one here as an example. This is Green Bay, Wisconsin. This is another market that we are looking at currently making offers on. This market is a good example. This 3 bedrooms in this market, the market range is about $30,000, $27,000 up to $93,000. The average 3 bedroom in Green Bay, Wisconsin is about $250,000 to $300,000. So you can see that that's a much more attractive market as far as my revenue range and my potential to make money in that market. Now, again, like I told you, my property goal was to do a case study for you guys on a property that was not going to just be a home run, right? And that it was the market itself. But this gives you an example of a good market when you're analyzing markets based on the average acquisition cost in that area. So Cherry Log was not that. However, I love buying properties that I'm going to use as well. And so I picked markets that I'm like, hey, I'm going to have some fun in this market. I want to be on water. The property that we ended up finding was on Zillow. We ended up paying $800,000 for it. 3 bedroom property on a lakefront property. A little small lake, but lakefront nonetheless, and really nice property. It was already an Airbnb short-term rental, doing really well, operating toward the top of the market. I think it was the number 5 property in the market according to AirDNA when we ran our analysis. Nothing really wrong with it when we went through it and looked at it. Really liked it, liked the location, made an offer, ended up getting it for $800,000. Notice my Z estimate on this property is 463. So that's another thing that some of you might say, hey, I'm not real interested in that property. That's because the guy that I bought it from actually bought it 8 months before me for $450,000. So he made a nice profit on that property when he sold it to me. That was the reality in the market. Prices had skyrocketed. And so if I was able to buy it, 8 months previous, I would have got a better deal on it. But for me, it still fit our property goals of what we were looking for. It felt like it had the potential for us to do what we wanted with it. And but not a huge property, paid a lot per square foot for it, and ultimately was in good shape. I didn't have to do a lot of fix up. I'll take you through that process here in just a minute. And so we made our offer, right? We get in here, ended up making our offer on that, running the numbers on the property based on the market revenue sheet and based on what we were plugging in as far as the realities of this property. We ended up making an offer, buying it for $800,000. We ended up doing a $500 home inspection. Our furnishings and interior package was $76,000. This was sold furnished. I'll show you the decision we made here in a bit, but we took everything out. We donated all the furniture and we started from scratch, because that was my goal with this one, is to really set it up from scratch. So I always tell you guys, budget around 8 to 10% of your acquisition costs for furnishing. That's right, almost exactly where we came in at. Our other acquisition costs were $25,000. That was our closing costs. Those are really high closing costs on DSCR loans. I did a DSCR loan. Those of you who are unfamiliar with DSCR, that means debt service coverage ratio, which means that they're going to lend me money based on the performance of the property, not my actual income. And so they're not gonna, I don't qualify personally for that loan. The property qualifies. The drawback with those loans are you're going to pay a lot higher closing costs, and you're going to have higher interest rate on this property. At the time, DSCR loans were about 6.75%. They were going, like I said, they were going up the whole time I was in the middle of this game, and it was really frustrating just watching them. It felt like every time I made an offer, I was paying another half a point in interest, which really affected our underwriting. But it was the reality, and that's kind of the reality we've been since then. And so now I think your traditional rates are somewhere closer to 7. DSCR loans are going to be 8.5 or 9. And so you just have to make sure that the deal's underwrite when you plug that stuff in. This is where they were at when we ran it. I put the numbers in based on the property's performance, the way that this property was performing as it was. It was already making around $80,000, a little over $80,000 for the year. In that, when we bought it, operating pretty well. Again, our target is going to be a little bit higher than that. We think we're going to hit about 130 this year. And so if I change that to 130, you can see that my cash on cash return and my numbers look a lot better. But conservatively, I basically have a break-even property. I'm paying 20% management, went through our management process. We interviewed about 7 management companies throughout this process. Anywhere from 20 was the lowest. I actually ended up with a co-host in this model, and a really great co-host that was recommended by one of our other members that was in the area, having really good luck with this co-host, and we've really loved working with her. Recommended her to some other of our members, but we ended up getting the recommendation in our school group from one of our other members. Most of the property managers in that market, we were budgeting around 30 to 35%. But nobody was really operating toward the top. Most of the top properties were operated by owner operators, not management companies in the area. And so we felt really comfortable with the co-host situation and what we do here. And we feel lucky to have found that at 20%. Normally, this is the lowest management fee I've actually got on any of my other properties. I always underwrite it about 30%. Our annual expenses and everything, we put them in there. And so you can see, I know these screens are small. Our cash on cash return projected at $83,000 in revenue is 2.3%. And so, like I always say, that's, we're about break even at about 10% of our acquisition. We are anticipating to, again, hit around that 130 mark, but we're also anticipating and hitting a high water mark for the area. And that's my goal with this property, is to be the top property in the market. I think we can do it. We're off to a good start. And so overall, that's what the acquisition looks like. Does anybody have questions on the acquisition side of it? That kind of took us through really the steps of the acquisition. Let me show you one other thing while you're thinking. If you have questions, go ahead and raise your hand and we'll get to them. But if I go to Rentalizer, and you pop in Rentalizer, I put in the address, because a lot of you guys do this to double check things, is Rentalizer showing us we should plan on about $70,000. And that is going to lose me money. I'm not going to make any money based on Rentalizer. However, I don't think that Rentalizer on this property did that bad of a job of an analysis. Normally, I would tell you should be somewhere around that upscale range. Upscale is right about $70,000, $69,000. So that's verifying that we're kind of running our numbers right. Sometimes Rentalizer is not always right on based on the comps that it pulls. But when I scroll down and I look at the comps, I feel pretty comfortable with the comps. They're right close to it. So on average, this property is not going to be that attractive for many of you in the acquisition phase. You'll notice that this property also, one of the comps that it pulled was the actual, this is the actual property on the old Airbnb listing for the year, and it's showing a revenue of $77,000. So I told you it made about $80,000 for that year. And so it's showing that, verifying that. And we had the numbers from the seller, so we did verify that. And then when I go to the top properties, and I want to verify kind of numbers, is what does the top of the market look like? Is that top of the market? I've got a couple right at $100,000, a couple in the 90s, but you're basically $170,000 to $100,000 for the top properties in that market. Does that make sense with the numbers I'm showing on my market revenue sheet? Yes, it does, right? So we're just kind of verifying these numbers, cross-checking all this data between AirDNA and top properties on Rentalizer, all these different things that we're looking at. But if you go through that process in step 5 now, what we're really talking about is really going through this entire underwriting analysis, buying, making the offer, closing the sale. So Randy, you've got your hand up. Any questions there from that to that stage?
Yes, just not familiar with the term of the co-host.
Oh, okay. So not familiar with the term co-host. Sorry, it was a little bit quiet. So co-host is someone who is they really act as our property manager in this situation. They put it on Airbnb, they do all these things, but they're really not a property manager. They're not a licensed property manager. There's somebody else in the market that really co-hosts. You'll see a lot of people, most of you who saw my ads, the minute you see my ads, you're going to see ads from people that are advertising how to get into this game and rental arbitrage or co-hosting and basically make money without owning properties. Those are co-hosts. They want to be in the game. They act as management companies. They're not licensed management companies, so they can't do a lot of things that management companies can do as far as actually taking over full management of your property. So like a lot of the accounts are in my name. They're not in I have to set up the accounts. They help us set all these accounts up, like our, Airbnbs or whatever accounts, like all of our accounting softwares and all those different things. And then we make them a co-host. They run everything. So technically, they're not licensed as management companies. So usually they will charge you a little bit less than a management company. But a lot of times they're really competent, because I prefer management style. When you guys go through my management training, you know that I prefer the small boutique management companies. I'm not a huge fan of the big management companies or the national brands, because they've got all these standard operating procedures that puts us right in the middle of the market. They are not set up to maximize individual properties. So I look for small management companies, and now more and more I'm going to start looking for co-hosts, because they operate much the same way. They're very flexible. They help us when we start to want to maximize our asset on the back end. A lot of the things we'll dive into here shortly, they are very, very good at being able to do that with us, and a lot easier to work with sometimes in that situation. So that's what a co-host is versus a management company. How you find a lot of them is, and I'll show you this in the management section, but I'll just mention it now. I'll go to these properties and I will look at top properties in any area, and I will start to look at their listings and see who's managing them, and I will reach out. So this one is actually a management company, Blue Sky Cabin Rentals. So I'll reach out. It's like, hey, they've got a nice property in the market. I might go to another one. It looks like it's a person, right? This is hosted by Abba. And so Emma might be a co-host. She might just be an owner. Most likely she's a co-host. And so I will reach out and start to ask them and message them and say, hey, would you be interested in managing any other properties? I saw you've got this amazing property. It looks like it's operating really well. We're going to be coming into the market. And so that's how you find co-hosts. And I always start with the top properties, both with management companies and co-hosts, and try to reach out to those people.
Thank you.
Sean,
Yeah.
Sean, how do you communicate with them? Because at some point you can't send actual emails or phone numbers. So how do you get past that?
Yeah, I'll go to inquire about a booking, and I'm upfront with them about what I'm doing. I'll just go into and inquire about a booking. Let's see where it is on Airbnb. I haven't done it for a minute. So let's say I put in dates. Can I message? Does anybody know where you message the? Let's see.
No, I know how to message
contact
them,
host. I go right here. So I go right here. I'll contact the host at the bottom. I knew. So you don't even have to go into a reservation. You go to the bottom where it shows you who's hosting it, and then you click on contact host, and you let them know what you're doing. So you see that right there, Henry.
Yeah, no, but I'm saying once you're messaging with them, in the messages themselves, you can't send an email address or a phone number. So I get you could have your initial conversation with them about, would you be interested? But I'm wondering how.
So the way that we do that, we spell out our phone number. So we'll spell out our phone number and just say, if you're interested, we'd love to chat with you. And then we don't say call us at. We say we'd love to chat with you, and then we say 801-842, but I spell it out. Okay, and then it doesn't get picked up. So far that works. So that's how we do that.
Okay, great. That's what I was asking. Thank you.
Yep, absolutely. Bill, go ahead. Are you do you have a question? I see you unmuted.
What is a DSCR loan?
DSCR loan is a debt service coverage ratio loan. It's an asset-based loan where the property itself qualifies for the loan versus the person. They're going to be higher down payments and they're going to have a higher interest rate. You're going to be putting 20 to 30% down on them. You're going to have a higher interest rate. That is also covered. Just so you guys know, everything I'm talking, and I'm not saying this to don't ask questions. I want you to ask questions, but make sure that when we go through this section and we go through partner section, financing partners, when you go in there, I talk all about the DSC, the different types of loans, and the DSCR is one of them. So I have more details in there, but that's what that type of a loan product would be, Bill.
Okay.
So yeah, as you go through this, always remember that, you guys, like if you feel like you skipped anything or you're like, just go right back to that section. Everything I'm talking about is stuff that was right there in that step-by-step process. And it's one of our options, right? It's an option that we use when we don't want that to hit our, like for me, I was in the purchase mode of a primary residence. I didn't want a whole bunch of other properties hitting my personal credit and my personal debt to income. And this one stays off that way. So that's one of the reasons I did that. It doesn't always stay off. You have to ask your DSCR lender, but in my case, it does stay off. Awesome. Let's see. I've got Rebecca. Go ahead.
Hey, Sean, I want to review the closing costs and the total outlay up front, and also go over what's the break even, if you don't mind.
Yeah. So my total outlay is going to be my down payment, which is right down here. It covered at the bottom, right? I was putting 20% down, $160,000 down. My home furnishing package is there. My closing costs, I just put that in other acquisition costs.
Oh,
And so that covered that's where I captured that, where a lot of that is not covered in anywhere else. So I was just put it in. And so
I see. And can you go over the break even and your numbers again? Sorry.
yeah, so my cash on cash return is on this scenario is 2.31%. So my break even would be just a little bit less than the $82,000. So I'm going to be really close to what I told you guys, that 10% range, right? Of my acquisition to break even in most of the markets. Now, if this was at 30%, for example, that would be my break even would be a little higher. The other thing you have to remember is I can also see so this is my first year revenue projection. So if I go clear out my $76,000, because that's a one-time fee, I'm not going to have that year two, right? I move that, I remove my closing costs of $25,600. I remove that. Now all of a sudden that's going to adjust my cash on cash return. Not a ton, but it went up by a full point based on not having those numbers in there as part of my overall, like, okay, next year I don't have that. Also, let's say I'm going to jump this to $500 a night. And that puts us right at about that $100,000 mark. We should no problem hit $100,000 on this property this year. Now, next year, I'm looking at about a 14% cash on cash return. So those numbers, you want to play with this based on year one, based on year two and beyond, on what you're kind of projecting and whether that looks good for you as a realistic, like, okay, as an investment. 2% doesn't look great, but it's going to be much higher than 2% next year.
Yeah, I like how you talk about year one, we are putting a lot of outlay and the return is,
it's going to be,
low.
it's going to affect that big time. Yep.
And then year 2, 3, and forever, it's going to be much higher return. We've done all the work and investment upfront, kind of show like a forecast. It'll be good to be able to see a forecast year 1, year 2, 3, 4, assumptions of higher ADRs.
And you can manually just do that, right? You just plug it into this, write those down, plug it into this, write it down, and you can manually make your assumptions. I have built a pro forma, but what I have found, even for my own personal use, I build a pro forma that gives me a 5-10 year pro forma, but every single market and property is so different. And so pro forma is hard because you're still doing it very manually. And so now I just look at this and I look at it manually.
You don't want to overcomplicate things.
Yeah.
Okay, thank you.
Yep, absolutely. Tim, go ahead.
Hey, Sean, hey, what's your thought process on who should own the listing? Is it going with a hosting company that has superhost status, or are you at risk if you want to move on with them and then now you're basically starting over again? What's your thoughts on who owns
My
it?
thoughts are a lot different than a lot of people's. One, and I'm going to show you this, and it'll make more sense as we move on through this case study, because this was a property that was operating very well, had a lot of 5-star reviews, really good reputation, and I don't put that much stock into that because I know how to launch a property and get a really good listing operating really well right out of the gate. So I don't really care that much about that, Tim. There is value in being able to get that and own the listing, but that's also why I don't really care whether my property manager keeps it or not, because I know how to launch a property and I know how to get it operating quickly, really, really well, the exact way I want it. So I don't put a ton of stock into that. And I'll talk a little bit more about that down the line, so you see it exactly what I'm talking about, because I'm going to show you the old listing that a lot of people would be like, man, I don't want to lose that. For me, that's not nearly as important because I know what I'm going to do on the back end, and I want to take the bar and raise it rather than just kind of keep what they've had and run with it.
What about if it doesn't exist as a short-term rental? You're creating the listing from scratch.
Yeah, so so that's going to be dictated on who your management partner is. A co-host, you will have the flexibility to have it in your name or their name. In my co-host, I actually told them to set it up in their name. Like you'll see my listing is still actually in their name because I don't really care to have it. I don't care about whether I have the listing or not. If some management companies, though, you're not going to have the option. It's going to be in their account, right? And most co-hosts, it's probably going to want to be in their account, but they might give you that option. So I don't, it depends on the management partner situation that you put together. On all of my properties, I'm either working with a full service property manager or a co-host, and the listing is always going to be under their account, not my account.
And you're okay with that?
And I'm okay. Yep.
Okay.
It's worked for 16 years for me, so I'm fine with it. Okay, awesome. Let's see, Philip.
Hey, Sean. Thanks, man. This is awesome. We're kind of at a similar part of our journey. We're evaluating purchasing our first STR. We're looking in 3 different markets, and there was something you touched on a minute ago that was really intriguing to me because we're running into the same issue. You said the prior owner had paid what $450,000 for it just less than a year ago.
Yeah.
And here you're sitting on an $800,000 purchase price, right? I'm curious, as you went through that analysis, did you see similar inflation in prices in that market? Was the fact that this was already an STR with a proven history, did that increase your preference to purchase this over maybe something that had not inflated that much? Would just love to hear your thinking because, even as you look at a lot of these vacation markets, there's a great deviation in what they're inflating over the last year. And we keep finding things. And the other question related to that is, were there any capital improvements done from that last purchase that kind of offset that?
Yeah.
That investment?
Great questions and great time to bring it up as well, because that should be a part of that thought process through the acquisition. One, there were no capital improvements. They actually didn't even change the furniture. They bought it furnished and it was an operating STR when they bought it. And so they didn't do one thing to it. So there were no capital improvements that brought it up. The overall market in this area had gone up that much. And so it was priced very similar to other 3-bedroom properties on the river, on the lake. If they were waterfront, this was the price point we were looking at. So it was an overall market that had gone up that much, and they were the beneficiaries of that, right? It was great. They bought it at the right time. We were buying it at a different time. I need to buy it at whatever time I buy it. I just need to make sure the numbers work on the back end for me because it's a long-term investment. And then 3 is, was there any additional money, or did I pay a premium because it was already an existing short-term rental? No, we did not. We knew we were going to completely gut this property out, remove all the furniture, set it up from scratch as a brand new listing. So I put 0 value on that. We didn't get any sort of assets as far as listing assets or anything else from the property, other than just maybe the fact of knowing that it was a good property and a short-term rental already. But we're making those judgments already. Some of you will find in your acquisition phase that people will overvalue or jump a value of a property up based on the performance of a short-term rental. Be very, very careful in doing this, because sellers are overvaluing. I'm seeing it across the board. Sellers are way overvaluing the value of that. And because most of it does not transfer to you, most of it's not going to be that you're going to get the benefit of any of that. And so like I can set up a listing, I can get reviews on Airbnb really quick. I can launch a property. I'm going to show you here in about 5 minutes how we do it. All of that really quickly, unless they have a customer base that is direct booking and it's running and operating without all of those other platforms and all of those other things that I can set up within a month, I'm not paying extra for that. So, always keep in mind the most valuable asset any business has, the reason businesses sell for a lot of money is because they have a customer base that continues to buy from them. If they don't have a customer base that continues to buy from them, then it's really of no value to you. And so just because it's operating on VRBO or Airbnb or somewhere else, and it's operating really well, guess what? They don't own those platforms. They don't own those eyeballs. You can operate just as well on those platforms as they were. And so that customer base is Airbnbs or Verbos, and you're not getting that even though they've stayed at your property. And so unless they have a system, which is rare, unless they have a system that is set up, direct bookings, and that's what's sustaining the property, and that's what the majority of the revenue is coming from. In that case, I will consider paying more for a property, more than the property value, but I won't if that's missing. I'm valuing the property based on what the property is going to be worth as a standalone home.
That's helpful. Thanks. And were there future bookings that transferred with this? Was there a property management company in play that you had to honor some?
Yes.
How did you handle that since it already was?
There were future bookings that we honored. We knew what we were doing. We were upfront with the seller of what we were doing, and told them, hey, we would like to keep you honor the bookings that are in place. We knew we had to go order furniture. We had to wait for delivery. We knew we had this process to set up. So we gave them a date of what our target date was to shut it off, and then move back. So they stayed in place and they just honored those bookings. I actually split the revenue with the current owner because I didn't want to put a new property manager in place during that time. I just said, why don't you, they were owner booking it. And I actually gave them 50% of the profits during that time, kept the bookings in place. They kept their nice reputation. They just kept it going. We split the profits until we were ready to launch it on our own.
Nice. Super helpful. Thanks, man.
Yep, absolutely. Go ahead, Brittany.
Hey, new to Vodyssey, so nice to meet you.
Nice to meet you.
I've made it through the first 5 modules so far, so this is right where I'm at. And you might have already answered this, this might be where you're headed, but my question's about the projected occupancy rate. So taking that data from AirDNA, and with this being our first STR, I'm kind of apprehensive to underwrite something break even, assuming 57% occupancy from the first 12 months. Do you find that in that first year, we need to build in some sort of conservatism to ramp up that occupancy, or is that to come and I'm speaking too early?
Nope. You're right on target. So occupancy comes from, we're going to look at that market occupancy, and we are going to we always project it. Before, Brittany, you used to see this sheet, and this is the only way you're seeing it now. Mm-hmm. AirDNA used to give us the 90th percent, the 75th percent, the 50th, the 25th. So we would see tiers of occupancy, just like we see tiers in revenue. We always conservatively went for the 50th percent in occupancy anyways. And so that's what this comes out at. Because this market's at 57% does not mean that other markets that you're looking at, you could have a higher occupancy in your market based on whatever AirDNA is telling you, but you want to stick with that 50th percent occupancy. It's a lot easier to run and push your rates than it is to get a lot higher occupancy than everybody else in the market, unless you undercut the market and you charge too little. And so that's the real, when we see high occupancy properties, they're typically the lower price properties. And so you don't want to do that. You're going to maximize your revenue by sticking around that 50th percent in occupancy, whatever that market tells you. In your market, it might be 70%. Your 50th percent might be 70% occupancy, but whatever that is, you want to stick with that and then underwrite based on, I get it. You don't want to necessarily underwrite to break even like this example that I'm doing, right? My only chance to make money on this, and the money that we're planning on making, is to set a high water mark in the market. I never suggest you guys do that. But if I was looking at Green Bay, and I'm looking at even Green Bay has a lower occupancy, right? So occupancy is just one factor in your underwriting. This is a 40% occupancy market, but I also am buying a property in that $250,000 to $300,000 range with some nice upside. And so I'm saying, okay, if I can break even somewhere around the middle of the market, if my market shows me that based on the acquisition price and where the middle of the market is, if that's kind of my break even, now I can make a judgment and say, I might be excited about this property because I've got some upside in the market that's already there. I don't have to raise the bar of the market itself because that's a lot more difficult to do. Does that help?
Yeah, it does. Thank you.
Okay, awesome. Good. And so this, I've got a bunch, guys. I'm gonna try to keep going through this. Dean, go ahead. Your hand's been up for a minute.
Yeah, just kind of related to that. So in some markets where there's a higher acquisition cost, so I heard you say earlier, and I wrote this down and want to make sure I wrote this down. You said to break even, you want 10% of your gross revenue to be, your gross revenue to be 10% of your acquisition costs. First of all, is that correct? But then my issue there is what happens to your point right there where you said that in some markets, acquisition costs are going to be higher. For example, a coastal market or a high touristy market, those acquisition costs in general are going to be higher. So would that rule of thumb still apply?
Yeah, because your revenue should also, it's just based on, doesn't matter whether I'm paying 10 million for a property or $100,000 for a property, based on paying 30% based on mortgage payments, 30% in management, and all those kind of expenses that are fixed that we know we have. That 10% rule is pretty universal across the board because it's just showing you, it doesn't mean you're going to get it. It doesn't mean that the market's going to support it. It means that you're going to need to generate that much income in order to break even on that type of a property because you've got mortgage payments, management fees, taxes, all those different things is what goes into that. Okay, this is my nut. I need to be able to crack every single month in order for me to break even and then make money. And it's usually around that 10% of gross revenue or 10% of your acquisition cost.
Yeah, your gross revenue needs to be 10% of.
Yes.
Okay, acquisition. Okay, and it's rule of thumb. Okay, thank you.
Yeah, as a rule of thumb, exactly. And always remember, those are rules of thumb. But you can see how it's spelling out in this example and on most.
Right. Okay, thanks.
Awesome. Cool. I'm going to look at the chat real quick and then we'll move on. So Eric, will you put the occupancy? I'm going to start at the top. How did you figure out that you will make 130? So Tanya, that is our, and I didn't figure that out based on any numbers that I'm showing you. That is our goal and our target. We looked at the overall, what we think we can get nightly rate wise and occupancy wise, and that is our target. And so yeah, Tim's saying aggressive. Thanks. Yeah, this is a little bit more aggressive, but that 130 number, because we are setting a high water mark, I don't want you to get confused on that. Normally, I would never suggest you guys do that. I'm telling you that because that's what we're doing on this property. But that number basically came out of thin air based on what we feel like we can do and operate. Eric, will you put the occupancy and rate you anticipate getting to make 130? Yeah, I'll show you that. So it's kind of on that same line. So let me go back here. And so we think we're going to be around 650 a night revenue, and we think we're going to be somewhere around that, still keeping that same occupancy, which just puts us right at 134. We were actually anticipating around a 55% occupancy, so that's probably going to be about right. So our nightly rate is 650 is what we're projecting. I've already booked the weekends. Oops, that doesn't work. 550% occupancy is not right. So that's right where we're at, 650, 55. That's our target. Average nightly rate is 650. We've already booked next. One of my direct bookings that I got, I'll show you in just a minute, was over $800 a night that we booked for a week at $800 a night. So that was a nice one. So Eric, there you go. 650 a night, 55% occupancy. That's our projection, and that's how we came up with the 130. And so we're planning on setting the high water mark, not on occupancy. You can see I actually dropped my occupancy a little bit from the market, but I'm pushing my rate. Christy, where did you get the occupancy numbers? It looks like the AirDNA shows 70%, but you have 56 in your spreadsheet. So did I not download? I'm pretty sure I downloaded it, right? So I get my occupancy right here. Oh, you're saying, so Christy, you're saying you saw in Rentalizer, when you saw the 70% in Rentalizer. I don't use Rentalizer for any of my numbers. I use it to kind of double check, see what they suggest, what they bring in. You saw 70% here in Rentalizer. I always get my occupancy by going in here and we look overall. We're going to put our 3 bedrooms in. I'm going to go to my overall occupancy and I'm going to download this and we're going to put it into our sheet. So my occupancy comes from actual occupancy in the market for the last 3 years. So you can see that's why I don't ever go to Rentalizer to get your occupancy, because they're showing me a little bit higher in this case than what you normally would see on our sheet, right? There's a couple months, like what's interesting about Rentalizer, they're telling me I should look at 70% occupancy, but that what did they also do? They also told me that I should have a $260 a night rate. And what I tell you before, the lower the rate, the higher your occupancy. And so that's why they're projecting the exact opposite of what I'm going to do, is a lower occupancy, higher rate. One, it's less wear and tear on my property, right? If I charge more and have less, like I get more revenue, but I also have a lot less wear and tear on my property at 50% occupancy than I do at 75% occupancy. And so that's where I get that on AirDNA. Lisa, would someone new to STRs be able to get a DSCR loan with numbers like this tight? Were you able to get this loan because you have a background in the STR market? With Templeview Capital, yes, my background does help. They give you a little bit, they give you a rate bonus by 0.25% if you have 5 properties or more. You can still get them. If you don't have the history, you just won't get their best rate. You'll be about a quarter point higher. So yes, you can, as a new investor, go get that. So the only thing that helped me with as far as the loan was a little bit lower rate. At the time, rates were at 7%. Because of my history, I was able to get a 6.75% loan. So with numbers this tight, their numbers this tight, they're probably not going to give you the loan as it would be today. The numbers were really tight, and that didn't help me get the loan or not. They actually, because the property was already producing really well and it was already producing, I was able to show the numbers at over 80, because they will look at the overall market. But if you have a property that's already producing high numbers, they took that into consideration and gave me the numbers based on its production, not the averages in the market. And so that's what helped us get it where it was so tight. Margarita, we just started Vodyssey. Are your presentation spreadsheets and templates available to us? Absolutely. So Margarita, any single lesson that you go to always has resources in the lesson itself, and you can download the complete lesson notes. And then also, like the spreadsheets, if I go to the property analysis or market revenue projections, we go here, and the one that we were just looking at, you download the lesson notes, but you also download market revenue projection calculator. This is the master copy. All of you that get the master copy, all you have to do is open it up, hit file, make a copy, and now you have an editable copy. So that's how you get that.
Thank you very much. That's awesome.
Absolutely. Eric, the cash you outlined in year 1 isn't returned in year 2, so the cash on cash return should still be calculated using this cash. This is still invested from the furniture purchase. So it is, you're exactly right, Eric. It does jump it a little bit. And so you noticed, in fact, I'm glad you brought that up. You noticed when I removed that, it didn't jump my cash on cash return that much. It jumped it like by 1 point, because the way that the calculator is in there, it didn't jump it that much. And you're right, it's the overall cash in the deal. And so that is our cash outlay. So what is our cash on cash return? You're exactly right. I shouldn't probably take that out. We should just adjust our revenue numbers. Appreciate you bringing that up, because that's an actual cash on cash return, because that money's in the deal. It didn't come back out. I didn't get it out. Julie, do you have a minimum night stay on your properties? Does it depend on time of year, such as demand is great, have a week minimum? No. So Julie, I have a 2-night minimum on all my properties, and I would suggest almost all of you do it. It's one of the biggest things that I notice when properties are underperforming, is they have too long of a nightly stay. We'll talk a little bit more about that as we move on, but I always look at performing, how is to optimize a listing and optimize the performance of a property. I always have it. I look at 3 things. One is, what do the photos look like? What are they articulating? How does the property present itself? 2, what is the average nightly or your nightly minimum? If you have more than a 2-night minimum, you're going to lose out on a lot of weekends. Sometimes in very hot markets on an established property, you can have higher nightly rates or higher nightly minimums, but that's after the property is already established. If it you start to lose occupancy and you start to underperform, I always go back to 2 nights. I never change mine more than 2 nights. I leave all my properties as 2-night minimums. Let's see. Mark said, I know you said this earlier, but I want to make sure I understand. You picked this location because business or personal choice. Personal. I picked 3 markets that I really liked that we want to go spend time in. Like we've already been to this property like 6 times with our family. We spent New Year's there. Hurts my revenue a little bit, and even the performance that we're getting, but we like this area. We like to spend time there. 2, business wise, I wanted a case study that was not a slam dunk that I could take from start to finish on a property that we could show you guys. My whole goal was to do this with this property, is to show you exactly what we went through on a launch and how we went through the launch. So Henry, your hands back up. Do you have another comment on that, or was that I didn't?
No, it was kind of following up the DSCR loan question. Are you able to get the DSCR loans if you're buying it, like you're setting up a new property that doesn't have demonstrated performance just based on AirDNA data or something like that?
Yes. Yep. They will be more conservative. And so what they're looking for, DSCR loans are looking for a debt service coverage ratio of 1.2 or higher. And so, you know, they need to, if your mortgage is and your fixed costs are $100,000 a year on that property, they want to see revenue of $120,000 or more. And so, and they will go off of AirDNA projected revenue when it comes to that. And so it is, and then they give you a ratio of that. So they also actually will say, okay, we're only going to give you, and every one of them is a little bit different, anywhere from 70 to 80% of that number, and it still needs to be 1.2 or higher. So they're going to make sure when they're underwriting it that they're not going to be right close to a break even. They want to see that you have some buffer in there.
Okay.
Jacob and Vanessa, go ahead.
Hey, okay, so I just wanted to clarify for some people that might not understand the co-hosting a little bit. We've run into a couple of the states that we've looked into that, and it really is state dependent. So people that are looking into a co-hosting or trying to find a co-host that will work with them for a lower percentage than a full PM, if the listing is under the PM as a professional service provider, then the money will be filtered through them. Not all states will allow that. So sometimes you'll have to be listed as the owner of the Airbnb listing or the VRBO listing, and then, or whatever you have, and you'll have to consume, like the money will have to be deposited into your account, and you'll have to 1099 your co-host. Some states do allow the co-host to hold the account. Some have to be, you still have to be listed. So it just depends on how you work it. Like I co-host for some people, and it just depends on whatever state you're in. So if you're looking into that, make sure you look at the laws of how the money has to flow, because that's really the only difference. But just keep yourself safe so you don't get slammed with.
Most of the time, the co-host in a co-host relationship, most of the time, in my experience, it has to go, the money is going to go through you as the owner, and then you're going to pay your co-host at the end of the month, whatever you decided. In a property management situation, the money usually flows through the property manager, then they pay you after everything's been taken care of. Co-hosting, you're exactly right. Most of the time, and it is state by state, there are some states that allow them to act a little bit more like property managers. Most of the time, the money's got to flow through you to them versus them to you. And so that's a big difference.
Most of the accounts will have to be set up as an owner account. Like you'll have to have your own account, and then you can make your co-host the primary. But that way that your taxes are all straight, because if she has an account separate from you and then you put your tax information in, the listing's not going to name the tax person. So whoever's on the tax documents, just make sure you have your own account. So Airbnb is going to send you a big long tax form, and it's going to be whoever has that account. So just be careful. If people want to co-host, you still have to be involved, but then you can set whoever you want to, like I can set a co-host to have their name on my property, but I do have to be able to log in.
Yep, exactly. Awesome. Okay, we're going to move on. So now I bought the property, right? So we ended up buying the property. We've run our numbers. We own it. This was the property, the way it was already set up. Like I was talking about before, we decided to keep the property operational while we were going through our setup phase. Setup phases are exhausting to say the least, and frustrating at times throughout that setup phase. As much as we think the acquisition phase is frustrating, I believe the setup phase and every property setup phase is a little unique. Our plans for this property were this was the existing listing, not a bad listing. This was the property itself, but we were going to completely gut the property. We bought it fully furnished. We were not doing any major renovations. We didn't like some of the paint. You can see there's very little paint in the property. It's a full log cabin, but it was set up nice, operating nicely, and this was their listing that we ended up going in and making a decision we're going to gut. But in the meantime, we bought it June 20th. We ended up needing a couple months to order things. We sat down with Mike Whitfield. We started that process with Mike and saying, okay, we're going to go through this design phase with Mike and go through this. And what did we decide? And what were some of the decisions we made? I'll show you as we went through that process with him. Our goal for this property, when I had identified our target audience, was going to be adults that were coming in to really kind of a sophisticated higher end experience for adults that were coming to the property. It's not set up great for kids. It doesn't mean kids can't be at our property, but like even this deck, you don't really see it from these pictures, but the deck itself off the deck is like a 70-foot drop. So you don't want kids playing on the deck and getting, it's dangerous, right? And so it made me nervous. The property itself with all the, the stairs and stuff like that, we weren't going to set it up for kids. And so we were going to now take it out, 3 bedrooms. They were all going to be king beds. They all had their own individual bathrooms. So we were going to set it up that way. And we went through this process with Mike going through, okay, what do we need to do here? And going back to the step we're in, right? This is the setup phase that we went through, deciding on our guest experience, deciding what we needed to do to furnish it. And so you guys have everything you need here to do this. You don't have to hire our professional partners. I worked directly and hired these guys to go through this process. It cost me a little bit more to do that because I'm hiring for professional services to help us pull it off, but I feel really comfortable with them. But they also, those of you that are going through this process, if you go into the classroom section, we just went through the whole process of designing the experience with Mike, right? They have this process laid out for us and we could go through that. So we already knew the process. We knew with Mike, we decided to tell, we gave him some good feedback of exactly what we wanted to do. So everything I did with Mike, I actually didn't do a full pick the lock session. We probably did after how many phone calls we had, but we went back and forth about what experience we were going to do. And then I had him help me with fulfillment and putting it together. So the goal was high-end luxury property, adults only. So Mike helped us put together kind of a storyboard, right? And so we decided what furnishings did we want. I wanted natural materials. I wanted all live edge tables. I wanted leathers. I wanted accent with whites. I didn't want a whole bunch of different colors in the property. And we wanted all of the bedrooms to be basically the same. Well, our property, we named it the Lakeside Treehouse. It's on stilts and it's like right in the canopy of the trees. So when you're in it, you feel like you're in a treehouse and we're on the lake. So our name of our property, that's our target audience, the experience. Oh, you guys can't see my storyboard, can you? I'm sorry. Let me, okay. So I'm going to bring that over here and I'll show you that. Now you can see that storyboard, right? So we started putting together our experience was going, again, Lakeside Treehouse for adults. I needed to have some sort of a theme throughout. This is not at all in your face type of a theme like my fly fishing property was up by Yellowstone, right? Your theme can be subtle. It doesn't always have to be this crazy in your face theme, but I had to be able to have this experience for adults that they felt like, okay, this is high end. And we started to put together the storyboard of what we were going to do. We were replacing light fixtures. We were going to redo some of the furnishings. These are the actual pieces that we were looking at the time. Mike put this together, some of the photos. All of our photos are tree houses, adult tree houses in different areas. And so we would show and use our artwork would show that tree house theme. Every single one of the bedrooms had a theme. Again, you'd see some of the tree houses on the artwork, but I have a spring bedroom, a fall bedroom, and a winter bedroom. And so we have, and then kind of the rest of the main areas are kind of the summer and just everyday, like, wide open summer pictures. But the bedrooms have a very specific spring, fall, and winter theme to it. This is the spring room. So we have a little bit different colors in the bedrooms, but everything else is the same. My fixtures are the same. My end tables are the same. Again, live edge end tables, all of our mattresses, everything's the same experience for every single guest coming in, because we're targeting 3 couples that are probably sharing the bill. Right? If I have three couples that are sharing the bill, I don't want one of them to feel gypped on whatever room they get. Right? Every room is set up exactly the same, and they all have their own bathrooms. And so this is our fall bedroom, our storyboard for our fall bedroom. The accent colors are different, but everything else is the same outside of the accent colors and the artwork. Again, I'm staying congruent with the treehouse theme. All of my artwork is tree houses. This is our winter bedroom. I got a treehouse in snow. Everything else, though, again, all the same, all identical. And then we had some stuff that we were doing on the deck and for the storyboard. So we started to paint the picture of exactly what experience that we wanted to provide for our guest. And so we went through that. We went through that process of really, okay, identify our target audience and identify what we want them to do when they're there. I want somebody to come into this property and feel relaxed. I want them to feel like they can disconnect. And I want them to feel like they're in a bit of luxury and high-end furnishings. Our furnishing budget could have been a lot less, but we actually spent a pretty decent amount of money, because when you start buying live edge and all natural materials like leathers and things like that, it gets a little bit more expensive, but we knew that going into it. But we also are trying to hit a high watermark in the market. So we're going through that step. That's our setup phase. Now we have to go order it all, right? Now we're going through and we had to order all this stuff. Our total cost, I told you, ended up being around $77,000 on ordering it all, getting it all. We had to send it to a receiver where they held it for us. We had to pay for, because it all comes at different times. We had to pay for storage on certain things. And then we organized for the property to get completely unfurnished. So somebody had to go in there. We had to schedule for somebody to now go in there. I called we had already targeted. We gave ourselves until the end of October to be able to do all this stuff. So this process of designing all this, ordering it, getting it all in, this took us from July, September, and then October. So it took me 3 months to go through this process of getting everything ordered, everything there, and getting the property pulled off the market for October. And we ended up having some people go in. They took all the furniture out that was in the property originally. So they completely took everything out. We ended up donating it to a local church in the area that had some places to place this, but it was emptied in. The only work we did to the property in these bedrooms, the walls were a little bit, they were kind of an off gray. They weren't really white. And so we went in and painted them a white, right? We wanted a slate, we wanted a bright white. We did white in here. And then in the kitchen, we brought some white into the kitchen because in these pictures, these cupboards look kind of dingy. They're actually white cupboards. And then this is another thing with the filters that people put on, but we wanted a white subway tile on the backsplash. That's the only work we did to the property as far as any sort of construction. Everything else was turnkey, ready to go, and everything was in good shape. So we got all that out. Started October 1st. We had everything go. It took us about a week to get it. It didn't take a week. It took about 2 or 3 days. Get everything out. Gave ourselves a week, and then we had everything delivered and set up the next week. And so we took that property off the market for a couple of weeks. And we still had, though, in the meantime, because we had some delays, we were not planning on 3 months to get all of our furniture. At the time, there was a lot of stuff back ordered. There were delays on getting stuff shipped. And so in that time frame, I made the decision. I told the property owner to go ahead and open up the calendar and let's keep booking until we figure out when we're actually going to get in there. In that time, though, October and November booked out. So we ended up having October and November completely booked out based on, and they didn't just still based on the existing and old Airbnb listing. We ended up getting all this stuff done that second week in October. And then the new people that were coming in, they actually saw a whole different cabin and they were super happy. They liked it. It was no big deal for them, but we didn't get to take the property over until the second week of December. We went live December 9th. And so we finally told them when we knew everything got done, we said, okay, now block the calendar off for December. And then we took this process. So we blocked the calendar off. We knew we had this, got the property furnished. Now we had to organize and go through the marketing phase and our launch phase of getting the listing ready, the photos ready, all of those different things. So we have to go through this process. We went through the exact process in our course where we go in to Brian and Katie's course, and we followed exactly what they teach us in the classroom on setting up and maximizing your listing. So we went through this process just the same way that I teach you guys to do that. I actually hired them to help us put this all together. I love the way they do it because now that they have a property and a story to tell, they do a very good job of creating the listing asset itself, the photos, the descriptions, the headlines, different postcards, all those different things. Because now, even though my property, and sometimes you guys rush to get the properties online, and I tell you this because my property was furnished the end of October. I didn't actually launch with a new listing until December 9th, because it took us time. Now that it was furnished, now I had to organize photo shoots. I had to, they can't really organize a storyboard of a property until it's ready to go, right? And so I had to have it ready to go. So now I have another about month to get this done. It's worth it in the end when you see it, because all of these steps are critical to have the results on the back end of the marketing. So we keep that, we went through with Brian and Katie and overbooked, and they came and we built out this storyboard of what we really were trying to do, right? We ended up sending Brian and Keats went to the property, and I actually had them do my photo shoot. They teach you guys exactly how to do your own photo shoot. I didn't do my own photo shoot. I had them go to the property. They were there for 4 days. Got us a lot of great photos in that amount of time. And so you have that option to do that. You don't have to. We're going to teach you exactly how to do it. Logistically, I had already had a bunch of travel already planned. We were in and out. I was not able to get there. It was easier and more efficient for me to send them and pay them to go do that for us. And so they went and got photos. So we took, and I want to kind of scroll through this postcard a little bit. I know you can't see all the details, but we went through and we identified 3 or 4 different listing postcards, right? We went through before and afters, the original photo montage of this property and what it looked like versus what we were suggesting for the new photo montage. And I'm going to open up the listing here in just a minute, but you can see that this is a lot of work and this is a long process. We're going through and say, okay, what did we have? What was working? Now that we have new photos, we have the property set up. Now what story do we want to tell? And this is where they come in and really helped us decide what and how we are going to tell that story. We have copy assets, graphics, all these different things. Keats did an amazing job with all the photos, going through and spending the amount of time that she did getting us all these photos. So took us about a month to get this process done. And I know some of us are like, holy crap, a month to do this. But I spend the time because I know the back end again is going to pay us off. This is what the listing ended up turning out like. And so we got I want to go back to the photo. Couple things that we're looking at through here. So we newly redesigned treehouse cabin with lake views. We've changed that. We changed our headline up a little bit. Sometimes we'll call it the lakeside treehouse. Sometimes we'll call it the treehouse cabin with lake views. We'll change up our listing a little bit during that launch phase just to see what gets if certain headlines work better than others. So we're testing things out like that. I would suggest that you guys do that. You can see my postcard does change a little bit too, but there's no redundancy. I have an outside photo of I'm going to refresh this because this should be a different photo. Yeah. I have an outside picture of the lake or the cabin with the lake. You saw, I don't know if you noticed, the one that I showed you just a minute ago before I refreshed it was just the cabin picture. Well, we tested in paid ads, and I'll show you in a minute how we test this. We tested these two photos, one of a little bit better photo of the cabin and the fire pit without seeing the lake. And then we tested this one where you actually can see the lake and see where we're at situated on the lake. This photo worked way better. So we had Serena move it back. And we said, hey, listen, the test is showing us that this photo, and that's why I refreshed that. But you can see that that's why we did that, because we know the photo with the lake worked better. We also don't have any redundancy. I'm picking 5 really good photos, maybe one of the kind of living dining area, one of a bedroom, the hot tub, and then sitting out with coffee by the fire pit, kind of overlooking the lake. That's going to tell the story. If somebody only saw those first 5 photos, it allows them to say, will I book this property off 5 photos? You all should be thinking about that with your listing. So now we're starting to talk about listing optimization a little bit, and the decisions we make when we go list the property. Next thing that I want you to pay attention to with the listing is we always start with great quotes in our description versus somebody having to go through the reviews. This is one of the only places I found I can truly relax and recharge. You sprinkle these throughout your description. It's a big deal. It gives you that third-party endorsement that everybody wants to see and everybody wants to hear versus just a full description of our property. You can see that in our description, I've got 1, 2, 3, 4, 5, 6 quotes and reviews from guests that have stayed in there. Now, this is one benefit that we had of an existing listing. These reviews did not come from our new listing because we didn't have any when we launched it. And this is a great thing to do with if you have an existing listing, is take some of the best reviews that property had and sprinkle them in your description. Right? They really stayed there. It's a legitimate review that somebody has said about that property. And as long as you have at or better than what they stayed at, put them in your description. And now all of a sudden, people don't even have to worry about not having any reviews. We actually have reviews now, but it's a nice way to sprinkle in that third-party endorsement throughout the listing. So as we go through, we're looking at our headline, our photos, our listing, and what are we trying to articulate? Am I able to articulate the things that I am trying to do, like for adults, of coming in and saying, being able to come in and just totally relax. So when I go through the listing photos, pay attention to how we go through the listing photos. I've got a nice outside photo. I'm going to start going through the first 5 photos are going to give me an overall depiction of the property. Then we're going to start going through the property, which we're going to start on the outside. We got some nice drone photos. We've got some, the trail down to the lake. We've got some outside photos of our name and lakeside treehouse, kind of looking on the deck and a sign that we've got, the drive down to the cabin, what it looks like. Then we go inside the cabin. And you're going to notice as we go through these photos, we're mixing in wide angle photos and we're mixing in narrow, like specific, like lifestyle or photos that would kind of put us in the scene. And so they're not all wide angle photos. And even like this one, this is like looking and the door's open and you can see that the door there, the top of the door, but you don't really see the whole room. A lot of times you guys try to get the entire room. This is a good wide angle photo, but I'm not getting the whole room. Another thing, small little details. I want somebody to place themselves as using my cabin and thinking, this is what I'm looking for when I go stay. And I can see myself experiencing this property. So I have blankets that are messed up a little bit. I've got pillows that are out of place. I've got the fireplace lit. That is not by mistake. That is by design. That looks like somebody's there using the property, right? I've got the charcuterie board. It's not zoomed in on that, but I've got this room is being used by somebody. Right? I want people to put themselves in that place. Again, we now are going to break up the redundancy. I'm still staying inside of the cabin. I'm breaking up the redundancy with a fireplace picture and the pine cones next to the fireplace. I've got my hot apple cider that's, unfiltered hot apple cider, part of the experience, which is this area is famous for its orchards and its vineyards. We have that. We've got some interesting angles looking straight up at the light that we put in. I've got, again, I'm just showing the pillows and a book, right? So what I want you to notice is think about what I am selling. I'm not selling the property right now. The property is secondary to the experience that I'm selling. I got my wine glasses on. up, right? I'm showing, you know, the coffee maker on, and I've got donuts and coffee being made in the kitchen. All throughout the property, this property is set up to be used so you can place yourself in the property and think, oh yeah, this would be a great experience. However, I am articulating what we have, right? I've got a laundry room. I've got a nice laundry room. We've got we've got nice mirrors set up. This shows you what this would be like, but you can see how strategically they're angling, showing, you know, the nice feature of the mirror, and the you know, a lot of women like to have full length mirrors when they get ready. So we show that in every property, but we make sure that the angle is correct so they can see some of the rest of the property, right? This is very thought out when you go through a photo shoot like this. We show exactly what it's like to be in the property. We show, you know, we've got, you know, does somebody have to ask me, do we provide, you know, shampoo, conditioner, soaps, things like that? No, they don't need to ask me that, because we show them we have really high-end soaps and conditioners and things that they are going to need when they stay there throughout the photos. I don't need to show that in the description. I can do it, you know, very tactfully throughout my photos of showing them exactly what it's like to stay here. Keep in mind some of the angles. The angles are important. It keeps them interesting. This is an angle looking through the railing on the top of the stairs, kind of looking back down at that room in the living room. We're going to show the bedrooms. You can notice I don't have any real wide angle photos of any of the bedrooms, but I've got a collage of photos walking through the door, standing in front of the bed, looking at the bed with a hot apple cider and a book on it, showing me just a corner of the room, a portion of a piece of art, a portion of the bed. I show a zoom in piece of the art. I show the end tables. So I'm showing and articulating exactly what this property has and the experience would be like to say without going to the front or the door of the bedroom or a corner of the bedroom and putting my fisheye lens on and taking a big picture of the room, right? So they do a great job of that when it comes to being able to articulate, but nobody is going to go through this thinking, I wonder what the bedrooms look like, right? So we take them through each room of the house, the quality in the house, what they can expect, what they will be doing, all of those different things that we want them to think about. We take them out on the deck where a lot of people spend time. We've got the chessboards out. We got the wine glasses out. They're filled up, right? We show them the hot apple cider. We have the game. We have the cards out, playing a card game. We've got the Scrabble in the background. This is the piece of furniture that piece of furniture that you saw in the storyboard. We ordered that and put it out on the deck. We go back down to, you know, this is kind of a gamey area, right? Now we're going to the hot tub. So they should know, based on what they're looking at, what this is going to be like to be here, but it has a lot more going on than what a lot of you do in your photos of just taking a picture of the hot tub. This hot tub picture has some grapes and a towel in it, right? This hot tub picture shows the hot tub, but it also shows the drink cart, and it's got the hot apple cider, and it shows them where their drinks would be and where their fruit would be. You know, we stayed with the things that are local to the area with the apple cider, the apples, and the wine. And so it's very relevant to what they're going to be doing when they come to this property. Obviously, we're on a lake. We're going to show the lake, but instead of showing the lake, we have a boat at the property, and we're going to show these point of view photos of what it would be like to go out on the lake. They do have this exact picnic basket, which was not bought by accident, and it looks like a little house. And so they've got that available at the Lakeside Treehouse, right, for them to use. Same when we start to go to the fire pits, the barbecue pit, and all these different things, they're used. They're showing the experience versus exactly what the property has to offer. The fire is always lit. You haven't seen one picture of my fire without it being lit. That's on purpose, right? Then we're going to show the local attractions, and we're going to articulate on our photos that Airbnb allows us to put text on our photos. Verbo doesn't. So in Verbo, you've got to be able to put it down here in the description. But if you can do it in Airbnb or on your own website, you want to put exactly how long it is to go to some of these areas. Be very descriptive. Hey, I'm showing you the Blue Ridge Scenic Railroad. We're 11 minutes from this. Really, I mean, these are iconic things to do in the area. the things that we want our guests to know about. So we're articulating what it's going to be like to not only stay in our property, hang out at our property, but what there is to do in the actual area as well. And so that's the photo shoot, but you can see why, and it would be important. I hope you can see why it would be important that this doesn't look like a photo shoot that you normally would see on Airbnb or Vrbo. You see what we normally see, you guys, and this is if you got anything out of this presentation, then this would be it, is to understand that your lift in being able to do a listing and optimize your listing with a better photo shoot is going to be significant, because it seems simple. It seems like everybody could do it, but almost nobody does it. Everybody sells properties. Everybody sells homes when they're selling on their Airbnb or Vrbo listing. You are not selling a property. You are not selling a home. You are selling an experience, and you've got to be able to articulate that. Your property, your home, your location is all part of that experience, but you have got to be able to articulate that in your photos. And it's very, very important to be able to articulate that in your photos. And so, and it can be subtle. It can be an over the top, in your face theme, like I would have done with our fly fishing cabin, where that's like over the top, like that's what you're coming to do. This cabin, I want somebody to say, I want to come here and relax. I had a lady on our paid ads send me an email and said, hey, I was at work. I was having a stressful day. And I saw your listing on Facebook. And I went to it, I checked it out, and I just felt more relaxed going through the photos. I just felt more relaxed looking at your cabin. And so just wanted to let you know that. That is the exact type of a comment that we want to hear, is exactly that. That means I'm articulating correctly what I was going after. She didn't tell me my cabin's awesome, it's beautiful, architecturally, it's amazing, all that stuff. She said, I felt more relaxed after a stressful day just looking at the photos. That's what I want them to experience when they go there. And so I need to be able to articulate that in my photo shoot. So I can get really long-winded on this because it's a super important topic. And when I do listing optimization kind of analysis for you guys, when I look at your properties, many of you will say, I'm doing everything that you're telling me to do, but most of you are missing this. Most of you are not articulating the experience, and it is what is going to raise the bar for you, whatever market, whatever property you have. And so it doesn't always have to be a super high-end experience. You can have a budget property and still articulate an amazing experience. And so I don't want you to think it has to be this, you have to spend $80,000 on furniture, right? This was also an $800,000 property. I would do the exact same type of thing on a $200,000 property. As conceptually, I would do the exact same thing. So don't think that, well, I'm not going to go spend that much on furnishings, or I'm not going to do that. It doesn't take you that much more to do a really good photo shoot than just a real estate photo shoot. And so if you want to raise the bar, this is what we start doing. So we put together our listing on Airbnb. We launch it on Airbnb. We've got 6 reviews. I want you to look at some of these reviews. Great spot for a quiet little getaway, still close to town, beautifully decorated, lots of little touches throughout. Shows how much went into this place. You'll feel welcome and right at home. One of the cleanest Airbnbs I've ever stayed in. Had a great time. Would definitely stay here again. This one, I hesitate to write a stellar review because I want to keep this place a secret just for me, but I'll share. What a peaceful, relaxing, beautiful place. The accommodations and the beautiful surroundings outdoors were just wonderful. We had so much fun doing absolutely nothing but relaxing, grilling, a little shopping in Blue Ridge, and all the simple, fun things. And so, we're getting that. So when I always look at my reviews for feedback, especially in the beginning, especially in a launch, I'm looking for those first 10 to 15 reviews and taking any feedback I can get to say, okay, did we miss on this? Right now, I'm getting really good reviews of hitting the marks that we were trying to hit when we went through this process. Came for some R&R, and that's exactly what we got. Going back again in July, great location, great host. Van said this was a surprise trip for my wife and kids as a Christmas present. It was by far their favorite gift. Julie, from the moment we stepped out of the truck, it seemed that the real world disappeared. Like, this is, you guys, when you get reviews like this, one, you take these all and you use them in your marketing. I can't write a description better than some of these reviews. I stepped out of our truck, the real world disappeared. We opened the door and immediately noticed the warmth and smell of the cabin. Clean. The smell was not of powerful cleaning chemicals, but aroma of natural wood, a true cabin in the woods. Every detail they put into their home was appreciated. My husband is currently looking for lamps with the wireless chargers. So she goes through this process. These people are super happy. They will write reviews that you start using now over and over in your marketing. And what's critical in these listings with these photos, some of you hear me talk about photos. These photos are done professionally, they're edited professionally, but they are not filtered to look more than what your eye sees. When you take a photo, your eye sees differently than a photo is taken. So many people filter out photos, and one of the worst things you can do is make your property look better than it is. You want it to look amazing so somebody books it, but you also want it to be even better when they get there so that you get reviews like that. Like they go in and they're like, man, this is awesome. I love it. Not, holy crap, how did they take this photo? Right. And so it's a very, fine line that some people are walking, I think, by putting too many filters, photoshopping too much, and their guests go there and they're a little disappointed. I've stayed at Airbnbs and I've stayed at Verbos that way, where I'm like, man, how did they get this property to look like this? You do not want to do that. You will tank, you'll get an immediate lift and you will tank immediately. That is not what we want to do. You want your photos to match exactly what you're getting on your reviews. And so that's why I show you those reviews. Next step for us now is, in fact, let me pull up. I'm just going to pull up an incognito window to show you guys. So we launched on December 9th. We have been on the front page of Airbnb since about 10 days, 2 weeks in. I looked at it about 10 days in, I believe. So I'm going to open up an incognito window so that you can see, because if I pull it up on that window, it's going to show you, because I have it saved. But if you go to Airbnb and you go to Cherry Log, we've been on the first page of Airbnb in a very crowded market since the a week and a half, 2 weeks in. So I go anywhere. I'm not even going to search 3 bedrooms. I'm just going to go to Cherry Log, Georgia. Don't care about the dates. Show me properties. You'll find us somewhere on the first page right there. So we're the 5th property down on the first page in Airbnb. Many of you say, how do I get ranked higher on Airbnb? How do I get my property to show up on the first page, right? This is a market with over 1,000 homes. This is not just showing me 3 bedrooms. This is showing me the entire market, over 1,000 homes on a brand new listing. I'm the 5th property listed. I'm toward the top of page 1, and we have been since we launched. So I'm showing you guys this because what we're talking about works. What works for the algorithm is one thing. You have to have an offer that people say yes to. Your property needs to get booked. And so during that launch phase, it's really important, or any stage, you have to get booked. Airbnb, Vrbo, doesn't matter what OTA you're on, they are going to reward you for getting booked. And so the only way I'm going to get booked is to have a listing that has an offer that people raise their hand to and say, I like that, I want to stay there. That's why your photos are so important. It's the number one thing you have to go through. So when I go here, I look at the photos, but I go and you can see our calendar has been booked very, very well. In December, we only had the days that we stayed there. We went there from the December 28th and we came home January 5th. And so I was gone for a week there. And so we took a week, we stayed over there for New Year's. The only days in December after we launched on December 9th. And as soon as we got our first booking came in on the 14th. And so I had 5 days where I didn't book it. Every other day in December booked, except for when we were there for New Year's. And January, I've had a total of 8 days in the whole month that were not booked. And so we've had a really successful launch. We are typically booking only about 7 to 10 days out. Our lead times are really, really short. And so you will not see a real full calendar beyond March or April. We've gotten a couple bookings in May, April, some longer weeks in March, but most of our bookings, like you can see February, What typically happens for us on this property is the weekends are booking and then we start to fill in the weekdays. But our rates are continuing to go up as we start to look at different rates. So like right now, we're still in that launch phase. If I go to April, let's see, we go to reserve those nights. I don't know why Airbnb shows $250 a night when it's not, right? It's $325 a night for those 2 nights in the middle of April. And so I still don't know why. It bugs me that they show rates that are not even accurate, but it does. You got to book it and you got to look at it. So, we're getting closer to where we want to be in the summertime, right? Right now, keep in mind, I launched this property in Cherry Log that we're the very slowest time of the year. Winter is the slowest time of the year there. We will start our rates of getting closer to that 6 or 650. We don't think that we're going to get an average nightly rate of 650 in year 1, but we are going to have nights that are in that $600 to $800 range during the peak times, where also we launched and then we just continue to raise our prices. So it's great. I wanted to show you this on the incognito window, just in real time of where we show up in a crowded market on a brand new listing. And that's why I say I don't really care too much about getting the listing that's already operational, because I know how to create and sprinkle in the reviews in my description. I know how to get better reviews. I know that I'm going to relaunch, and I know how to stay on the first page in Airbnb or Vrbo or wherever you're at. Now, you guys always hear me talk about in the marketing section. This is all of this stuff that I've talked about with you right now. This is in the classroom. Go back to the masterclass. This is all of steps 7 and 8. So this is setting up your listing, pricing your home for maximum profitability, branding, how to maximize revenue during the slow season, things that we do. This is where I talk about having 2-night minimums instead of longer minimums. And you will fill in the gaps. I have 2-night minimums and you'll still fill in those gaps. You think you won't, you will fill in the gaps. We've never seen that to be a problem when we have lower nightly minimums. And then the refine section, how to get those amazing guest reviews, how to build the reviews, right? We're getting a lot of reviews from most of our guests are leaving us a great review. So all of those different things on how I did that, go through steps 7 and 8. Now, the next section is maximizing the listing. And this is now taking we had a successful launch on Airbnb Vrbo. What I always suggest that you guys do is that we launch on the OTAs, get feedback from your guests, see if the marketplace is willing to book your property. That will tell us almost immediately that I have an offer that somebody will pay for. And that's all I'm looking for on those OTAs. The minute I know that, now I would suggest that you start building your own sandbox. You start building your own customer base. In my situation here, I launched them at the same time. I did paid ads right out of the gate because I was pretty confident I had an offer people were going to book. You guys, I want you to test it out, because many times you will waste money on paid ads. And what I'm going to talk to you about here now in Maximize and what we did with our paid ads, many of you will waste money testing it with paid advertising versus testing it for free on the OTAs. The minute you have a property, great reviews, people are booking it, you're able to push your prices, you can start to now build your own funnel, your own website, right? We show you exactly how to do this. Step 9 takes you through the process of exactly why we do it. You go into the classroom section, paid marketing. This right here, you take this step by step through. I do all of this myself. This is not hard to do. I did all of this. You guys can do it. I know you're busy. It doesn't take that much. It's not that difficult. Scott's done a great job of just going straight down the line, step by step, how to set up your Maximizer software, how to set up your Facebook ads, all these things that I'm going to show you right now that start to get exciting. So now we go in, we build our Lakeside Treehouse Maximizer site. You all have access to this. And so this is our booking site. This is how we're going to get people to raise their hand and say, yes, Sean, I like your property outside of the OTAs. We're still running on the OTAs. I'm not taking it off, right? I'm making money on Airbnb right now. Our co-host does a great job of handling that. And so we're going to let Serena run with that. We've got a listing that we like, and now we're going to spend our time on the back end building our own customer base. And so we built out our Maximizer site. The templates are in there. I wouldn't suggest changing it up. This stuff works. So We're going to have a quote. Again, I just sprinkled in one of our quotes from our guest right there. And instead of a description of anything else, I took one of the quotes that we had that I just read you on a review from a guest, and we put it in there. We talk about our description, same description we have on the OTAs. You don't have to rewrite it, right? I'm mixing in my quotes there. We start off this one with things to do in the area. We're showing them why they're coming and what they're doing. Go through the description about the property. We go through a gallery. It's an Instagram kind of style gallery. You go through, I put all my photos in here. I want you to pay attention to the layout and the template of this site. You can't ever have too many photos. You don't ever want to have photos. You never want to have photos that are either way too redundant or bad photos, but you can never have too many good photos. People love looking at photos. So you can put a whole bunch of photos. I've got probably 80 or 90 photos in here, right? And so you go through that. Then the next section is about us. It's a picture of my family. I don't want them to think that this is a big company, management company, anything else. I want them to think, hey, I'm renting a cabin from Sean and Teresa. And I tell them a little bit about us, why we love the area, what made us buy this property. And we hope that they love it as much as we do. Same things we teach you guys to do. And then we post our reviews at the bottom, and we throw in a bunch of the reviews that we've had. And then, and in this case, we have some of our own reviews. We haven't even loaded in our own reviews yet. These were reviews that were previous. Again, we will still use some of those from the previous property or the previous cabin. If you've never had a previous listing and it's brand new, have some of your reviews from those people that have stayed out at your friend's family that are giving you feedback about your property during your setup phase. You don't have to have a whole bunch of them. Start with a few and then start layering them on. What you notice though, there's nowhere to book. Right? There's nowhere to book. The only thing they can do is to check availability and get their 15% off discount code. When they click on this, they sign up for their 15% discount code. It's good for a year. We're going to send it to them. So I click send it to me. The next step of this process, and this is all part of this stage, but we set this up, I'm just showing you, is the booking request form. There's no calendar here. We do tell them rates, because if my property is going to be around $500 or $600 a night and they're looking for a $200 a night property, I don't want them inquiring about it because it's not going to be in their price range and it's not going to be what they're looking for. So we have our off-peak rates and our peak rates. So we give them a range, tell them what cleaning and tax is, and then we tell them they can request a check-in time. That's where a calendar will pop up, and then they can send us, get an exact price quote from us. When that happens, we start to go into the back end of our system, and these are all the contacts that we have, and they will say, let me go to one that has requested a booking. This one requested a price quote, and she requested number of guests 6, check-in April 21st to 23rd. I looked at those dates, and unfortunately those dates were taken. And so she said doesn't have any other. I said, do you have any other dates? In this case, she inquired about a booking. We weren't able to accommodate, but I wanted to show you you will find them on the back end, and you have all these conversations with people that if I go to all, I've already read all of them, but we have a lot of conversations with people asking for different price quotes, things like that. That's why we built this for you guys. So you start building your own customer base. So you start booking properties direct. We filter traffic through paid ads on Facebook. So we build our ads, we build it very similar. Scott's going to show you exactly how to do it. I'll show you what I did on this property. We go back to my ads, my campaigns. This ad, we launched it December 14th. We ran it until I shut one of them off. I had one ad. We do lead ads and conversion ads inside of Facebook. We looked over and we realized that we were spending a lot of money on conversion ads that we were not getting any business from. And so we would have shut this off a lot sooner, but we let it run for 30 days for a full case study. But normally I would have only spent probably about $500 to $550. I might have let this run for about $100 before I recognized that this conversion ad was not converting. We got almost all of our results from the lead ad. So again, we were getting inquiries for $1.42 on Facebook, people raising their hands. So what does the ad look like? First of all, we go to the ad, let me go to view the chart. One thing that I want you guys to notice about the gender of the people who are going to be responding. Hold on, let me refresh that because it's not. Oh, I clicked on sorry, I clicked on the conversion. This is not loading. See if I can refresh this on the performance. What I wanted to show you on the performance, it's not showing it right now for some reason. It's not pulling it up. The difference between the people who will respond to most ads is about a 1 to 4. About 80% of the people who are responding are going to be women. So you have to make sure that your property is appealing to women, because they're the ones that are looking and booking a lot of these properties. It almost doesn't matter who and where your property is, unless it's literally set up for a guy's trip, like my Fly Fishing Cabin. Most of my guests are guys. If you are couples or families, most of the time it's going to be women. So I'm going to go back to I'm going to show you the ad itself. I'm going to show you, see Facebook posts with comments. This is what the ad would look like on Facebook. So it's going to pull up. This is our top performing ad. It will always show you the top performing ads at first. And they say they base performance based on comments, right? We've got a number of different comments on these. This is our second best performing ad, our third best where it filters through. So I have a dynamic creative ad. What that means is you can load up to 10 photos, 10 of your best photos, and Facebook will deliver which ones that actually get the best conversion. And so you want to do that. You want to let Facebook decide, because I might really like this photo, but it didn't perform nearly as good as this top photo. I might like this photo better, where I've got that I use as my main photo on my lakeside treehouse, better than this one with the fire pit going that shows it a little bit more at night and things are used. But guess what? The data shows us, because I had both of those photos loaded in, this one is getting better responses. But the ad itself, you can see that description on the ad, we use a quote. You always use a quote instead of something about your property. We always want to tell them what they're getting, 15% off, and then we have to have something about the property itself, lakeside treehouse. That's very descriptive. And then again, this, if you click on this, it actually will show you the full description, and it takes you right to our booking page. If you want to book it, here it goes, and this is where it takes you. So our results on this, let me go back to the actual numbers, go back to my campaign. Total, we spent on the first 30 days, $932. So we had $932 that we spent in 30 days. That's a pretty aggressive launch. I usually tell you guys to plan on $10 or $15 a day. I did $15 a day for lead ads and conversion ads because I wanted to do a 30-day case study. Normally you would give yourself a little bit more time. You don't need to be that aggressive. We have almost 481 contacts in there right now that we're talking to. We ended up in the first 30 days, we ended up having a total price quotes of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 total price quotes that we were able to give out. We had another 10 people reach out with dates that were already, these X's are dates that were already taken. So 5 more people that dates were already taken in those first 30 days. And out of those requests, I booked 3. So I booked a total of 3 bookings in 30 days. My total bookings that we got from direct response ads was a total in our pocket of $680. So I give them the quote, February 10th to 14th. The quote was $1,480. With their 15% discount, we brought in $1,280 on that one. We brought in $45.51 on that one. We brought in $705 on that one. So a total bookings of $6,890 off of $900 spent. So a little over a 7-to-1 return on ad spend. And it's a little over 7-to-1 initial return on ad spend, front end return on ad spend. I would do this if I could break even all day long, because now I've got this many people that raised their hand and said that they were interested in my property, 480 people that have said they were interested in my property that we are communicating with. If you go to the conversations and look at how many conversations we've had, if I go to all in here, like we've got pages and pages of conversations. If I just keep hitting load more, it will show you all these different conversations that we're sending out. We set this up so that when somebody comes in, we don't do all this manually. This is all set up for you guys. The only thing I do manually is an actual price quote. So if I get a price quote, what was one of the names on there? I saw Nancy. What was Nancy's last name? Nancy Gone. So if I go to Nancy Gone, I'm going to show you the conversation of what it looks like when somebody books right there. So Nancy came in, Nancy asked, so this part is automated. Hey, Nancy, Sean and Teresa here with the Lakeside Treehouse, Cherry Log, Georgia. Hey, thank you for your interest. Just sent you the code to your email. Be sure to check your spam if you don't see it. The cabin is awesome. Built in 2020, super cozy, and the hot tub is perfect to relax in on the deck. Here's the link. Do you have specific dates in mind that you'd like an exact price quote? Every lead that comes in gets that text from us. And then people respond to the text. And so Nancy said, yes, please, February 10th to 14th. I said, great news, Nancy. Our cabin is available February 10th to 14th. Our price for February 10th to 14th is $370 per night for a total of $1,480. With your 15% discount code, your total would be $1,258 plus cleaning and tax. Let us know if this works and we'll contact you to finalize the reservation. This is the only part that's manual. So you saw it in a month. I only had to have what, a total of 16 or 17 text message streams, right? But I have a whole bunch of people that are getting information from me on a regular basis until they raise their hand. So I make a note of that you can do this. It's not overwhelming. I go back to Nancy, said, believe it maybe, what's the cleaning fee? Cleaning is $165. Perfect. We may want to check it out Monday rather than Tuesday, but we're definitely in for 3 nights. Let's do it. Awesome. And this is where you hand it off and I get completely out of the loop. And once they book it, and she says, I'll have Serena, our local property manager, get a hold of you on this number to finalize everything. We just spent New Year's Eve there. It was fun. Really fun. I'm excited for you to enjoy it as well. She said, we're really excited as well. Listen to this. I promise to take good care of your beautiful home. Thanks, Nancy. And so this is these are real conversations, real bookings. I only got 3, but they paid a lot of my ad spend and I'm building my list for the long term. We will continue to go and spend that money on advertising. Any questions on that? I probably had a bunch of questions because I talked a little longer because I wanted to make sure we got through some of this. Go ahead and raise your hands. I'll start at the chat. It looks like we've got some chats on this. Looks like Tony, is your target for 3 sets of couples? Yes. So we did. Yep. Bill, speaking of my property manager today, adding photos of things to do. You said that once captions are added to the photos, that the copyright goes away. What's the correct terminology? I don't know, really, Bill. I think that is the correct terminology, that you're making it your own photo. Say I'm editing and adjusting photos and making them my own, and see if they're willing to work with you on that. Ask them what they're looking for. If they're giving you, I know they're giving you pushback. Ask them what they're requiring, and then go, let's try to meet those requirements or make them happy about it. Lena, how long do you have to personally be there to do the setup, even if you hire a designer, handyman, etc.? So, Lena, I always budget. That setup time frame, I usually give myself a week to 2 weeks. If you have somebody doing it, they can do it faster. Like if you have your designer, and like I have Mike Whitfield and his team there, they'll do it in a couple days. But if you're going to be involved and you're going to do a lot of it and you're not going to spend the money to have somebody else do it, give yourself a week to 2 weeks. The better organized it is, the less time it's going to take. Why wouldn't you say lakefront views and lakefront instead of lake views? We do, Christy. We change up the headline a little bit. Definitely, I always say Lakeside, actually, because it's our name. We will start to use Lakeside Treehouse in every headline. It just happens to be during the launch, and I teach you guys this in the course. You're going to test a lot of different things, and you're going to change up a couple different things. But we actually say Lakeside Treehouse, and we will start to exclusively use that in almost every headline with variations of that. Okay, let's see here, Tonya, but once you delete the old Airbnb account, you don't have the history of the reviews, so just copy them down first, use it in the new description. Absolutely. We just copy them. We just take an account of it. We take the ones that we want to use and we use them for our new description when we're launching a property that already had some good reviews. Vanessa, I've seen owners add their own quotes in before if they don't have any reviews. Yeah, and you can do that. I like to have somebody, like most of us have friends, family that we can get some good feedback from, and so we'll use them for reviews as well. And then using it from different listings. Sometimes you'll use a quote of an area from the area, and so things that you can do there to get a little bit creative. Margarita, where do you get the high-end products, shampoos, conditioners, body wash? Are you able to get supplies in bulk? Yeah, we do order them in bulk. We actually order them on Amazon. So we find them on Amazon, that the Berkman brand, people are kind of familiar with that. I think they were on Amazing Race, I've heard. And so people kind of are familiar with that, but you can buy them in bulk on Amazon. We buy them in gallon containers, and then we have them filled up. So make it easy on yourself. There's other places besides Amazon. Amazon's so easy, and they carry almost everything. That's where we get most of our stuff. Vanessa, Verbo just started allowing us to, oh, nice. Last week, Verbo allowed us to add descriptions on photos, which is great. I like that a lot better. People don't take the time to read every little thing. And so when you actually have it on a photo, that makes it really nice. Mark, I can't emphasize enough what Sean is saying about the photo shoot. Standard wide angle real estate photos don't cut it. The house needs to be staged like people are living in it, and use close-up photos to show detail and tell the whole story, mixed in with the wide angle so people see a space. Absolutely appreciate you you emphasizing that, because that is, if there is one thing that everybody can do to raise the bar on their listings, almost all of you can do this. Brad, does Airbnb list new properties first? Now, they will, if you do a promotion. They don't list them first, but they do give you a bump if you, like, right when you launch. And we did this on our launch. It's expired now. We're too far into it, but you want to take advantage of if you offer your property with a promotion, like a 20% promotion discount, they will give you a bump in the algorithm, and they will start to show it to more people than they normally would as a brand new listing. I'm not sure exactly how long that lasts. I think it's 10 days to 2 weeks, somewhere in that. Whatever your promotion length is, that's what it is. And you really have to take, if you're going to do a promotion, make sure you get those bookings so that you keep that momentum going once that bump or that lift falls off. They don't list them first, though. It doesn't, they're not going to list them first. They're going to give you a bump. Sometimes that means on page 3 or 4 or 5, it just means they're going to show you more than, or higher than they normally would have. Tanya, the other top 5 listings are discounted, but not yours. Are they probably discounting to stay booked? Yes, so they could be, and they could be during that promotion stage. I didn't notice that. Well, I closed my incognito window, so it probably was showing that. They could have been in that promotion stage and where they're getting that bump. And so mine's not discounted. I'm not running a promotion anymore. We did when we launched it, though. And so mine did show a discount the first 10 days or 2 weeks, as long as that promotion lasted. What systems are you using for pricing that is changing, especially during the first year when you're testing what pricing is best? I look at smart rates. AirDNA smart rates is what I look at to kind of judge where we want to be price wise. Our co-host uses Price Labs. And so very similar, whether you're using they're all going to give you very similar supply and demand kind of pricing suggestions. The key is you don't want to just be right in the middle of the market. You want to push it and say, okay, I want pricing suggestions if I want to be at the middle of the market, or the 75th percentile in the market, or the 90th. In my case, I want to be toward the top of the market. I was talking to one of our members. Many of you have met and know Jessica Kilgoing, who's one of our expert member advisors, and some of you talked to her on your onboarding call. Her property, she's way above already at we do that slider to the 90th percent, and she's already getting way above that. And so now she has to kind of manually push that price. But in the beginning, you're going to start somewhere in the middle of the market. You're going to slide that. Any of the price optimization tools will work. And if you do have an AirDNA subscription, smart rates work just as well as anywhere else. And you don't have to pay for another system. Rebecca, how did you get ranked on page 1 of Airbnb? What all did you do? How is your website different from one of Guesty or Hostfully? So I think I answered this, but I'll repeat it. Is the only thing we did is we had an offer that got booked. Our property got booked. That's the only thing I focus on to get ranked on those OTAs. There's not a trick or an algorithm that you are going to do outside of getting booked, and you might get a lift to be able to hit that first page if you're right during a launch, during the promotional period, but that's only going to last a couple of weeks. and then it goes away. The only way to stay there is to have your property get booked. Think about what makes these OTAs money, right? They only make money from bookings. They only make money when your property is booked. So it makes sense as a business that they are going to reward properties that are getting booked, that the marketplace says, I like that, I want to book it, and I'm willing to pay for it. And so they will reward properties that are going to get booked. They also are going to reward properties that get booked at higher rates because they make a percentage of your actual rate. So think about the only way to do that is to have a listing set up the way that I'm showing you guys to set it up. Is it's got to be completely optimized so you articulate exactly what you have to offer, and the marketplace says, I like it, I want it, and then they will reward you for that by putting you at the top of their pages. All these other things that you hear about listing algorithm tricks and everything else, the algorithm is super complicated. And there's a lot of things that you can do to kind of filter through an algorithm a little bit, but they're minute compared to the one thing that they're looking at. And that is, does your property get booked? Because that's how they make money. It's the only way they make money. And so they want to see properties get booked. It's the only thing I do. And I can't stress enough to focus your time and effort on articulating what you have to offer. Set that property up correctly. Get the listing set up correctly with the right photo shoot so that the marketplace says, I like it and I want to book it. That's how you get higher. How is our website different from Vodyssey or Hostfully? It's not a direct booking site. So if I go back to my property again, ours is a lead generation site. So all we're trying to do is get people to raise their hand. If I go to Lakeside Treehouse, you can't book on here. You can't book anywhere. Vodyssey, Hostfully, Lodgify, OwnerRez, all of those are direct booking sites. They are going to give, you have to think about what people want when they're looking for properties. The average time to look for a property is over 6 hours. So the chances of you actually getting in front of somebody at the tail end of that 6 hours, and usually that 6 hours is spread over 2 or 3 or 4 weeks or maybe months. How long do we look at properties before we actually book one? You have to think about, if I go to your Vodyssey site or your Hostfully site or your OwnerRez site or whatever direct booking site you have, I go there, they look like better properties. They're better websites. They're actually giving the prospect more information than I'm going to give them. But what I'm trying to do with my website is I want to start a conversation. People are looking for two things when they're looking for properties. One, they need to, outside of if they're attracted to the property, assuming they're attracted to your property because they clicked on it. The two things they want to know are, what's the price and is it available when I want to book it? And so if your Vodyssey site, your OwnerRez site shows them the actual price and exactly if it's available when they want to book it, just like Airbnb or anybody else does, when I go here, I've got everything I need to know about this property. I can go check out my pricing, I can check out the dates, and then I move on and I go look at the other ones. I have no reason to reach out and say, hey, Sean, what is your price? Is your property available? I get with our properties and our websites that not everybody is going to be happy about that. They might say, I'm not, whatever. I'm not going to give you my information just to find that out. We might lose somebody, but we get enough people to say, hey, Sean, cool property. What's the price? Is it available? Right? And so we're going to give them something. We're going to give them something of value, which is a 15% off discount code. So we say, check availability and get your 15% discount code here. And they can. We're not misleading them. They go here. I have them fill out their information. And some people are going to lose right here. They're going to say, I'm not going to give you that, Sean, just to look. But some people do, right? I just showed you 400 and something people that just did in the last month. So 480 people did that in the last month. So I go back to my website and I'm going in detail on this because a lot of you asked this and a lot of you are thinking, okay, it works better. It'll just be better if I send it to a Lodgify site or something else. It doesn't. I've spent a lot of money and a lot of testing on this. This works the best by far. It's the best return on ad spend. It's the best way to build your business. They go here, they send it, the information. They go there and then they say, here is how you get that information you want. And then they request. And now all of a sudden I'm talking to them. I've got a conversation started. The conversation I just showed you that was started. And as an example, When they go to your Lodgify, your Hostfully, your OwnerRez, all your direct booking sites, they're going to go there, they're going to get everything they need, and then they're going to go look at other properties. The chances of them coming back to you are way less by just them remembering it and coming back to you than it is if you're actually talking to them and saying, hey, Rebecca, this is, here's the quote for the property. I'll reach back out to you and you'll tell me, yes, I want it, or no, I want to think about it. Most people might say, I want to think about it. Like I just showed you, out of all those people, I only booked 3 properties in the first 30 days. I only booked 3 times during 30 days. Most people aren't going to do that, but I don't stop communicating with them now. They're in my list. And so when they go to book a month from now, I'm the only one talking to them. And that's why I stressed my front end return on ad spend was 7 to 1. Every dollar I spent, I got $7 back. Why don't we do that over and over and over? My back end return on ad spend, my overall return on ad spend, if you look at it for the year, is going to be at least double that, minimum of double that. And so we're going to continue to do that as it continues to go on, because I'm talking to them. So that's why I don't use direct booking sites, is it gives them everything they need. There's no reason for them to ask me anything about my property. I want them to ask me about my property. Do I lose people that are hitting our ads? Absolutely. How many people saw our ads that I got 10,000 impressions, and I got 400 and something people sign up for it. So we have a lot of people that saw it that didn't give me their information, but that's okay, as long as I'm getting a return on my ad spend. Marguerite, is it better to do this type of website that does not connect to Airbnb or go through Lodgify? So same question. I would 100% suggest you guys do this versus sending traffic to, I've tested it. I've sent property traffic to my Airbnb site. I've sent traffic to my property manager's site. I've sent traffic to like Guesty, Lodgify, OwnerRez sites, direct booking sites. Your return on ad spend will drop significantly. You'll be lucky to break even. And so, and the best campaign I ever did, I barely broke even on a direct booking site.
Can I ask you a quick question?
Yep.
So we set up our website on Lodgify, and what we're finding is that there's not much more other than just having a website, and we're actually having problems with it connecting to Airbnb. So do you suggest that we just not have a Lodgify site or a third-party channel manager and just do the website the way you're suggesting, and then maybe monitor some of this a little more closely?
So great question, and I'm glad you brought that up. So Margarita, you are managing your own property, correct?
Well, right now, yes, because we're in a unique situation. The house that we have up here in the mountains has an HOA. It's actually another question, so you can disregard the other question. It has an HOA, but the California ruling AB 32, which prohibits HOAs from restricting rentals in the neighborhood, has kind of helped us, because we can rent our property, which is in a it's in a mountain resort that's only 2 hours from Los Angeles, Orange County, and the San Diego area. So there's a lot of generational families that, the grandparents will rent it, and then they have their grandkids come up for the ski season or during the summer months. And then they have a relaxing time. We have a, downstairs bedroom and an upstairs master. So there's 2, and it can also be rented with 2 families. So that's one of the reasons why we did a website with Lodgify to begin with, because we thought we could even reach out to our own contacts. But I guess my question is there a way, this presentation was super helpful, because it really got me thinking about our target market. And it is exactly that. It's a generational family or 2 families with kids that share the cost of the house. Otherwise, I think it would be cost prohibitive for some families. Is there a way that we can kind of get this across? I think what you gave us with the photography is super helpful, but is there any other way that we can do this?
Yeah, so one, let's go back to the website. So if you're managing your own property, you do have to have some way for them to book. You don't have to have a channel management system. You can use like an OTA for that. We have some people that manage their own properties, and they're set up on Vrbo or Airbnb, and they just run. When somebody raises their hand and says, I want to book your property, you have to have somewhere to be able to book it. And that's where, if you're managing your own property, that's where those channel management software websites and direct booking sites come in, because what we do is we want to send our paid traffic to our site until they raise their hand, and then they've got to go somewhere. They've got to book it somewhere. In our case, we have property managers, and so we send them to the property manager, and then they take care of the booking. In those cases where you guys are managing your own properties, if you're not, you can go book it on Airbnb, Vrbo. I would suggest not, because you're going to pay those fees. It's better to have your own channel management system that you can actually now take the booking, send them the links, go ahead and finalize the booking through that. So that's where they come into play. And you definitely want to make sure that the connectivity is working and everything with the API connection through your OTAs, but you're not going to pay the OTA fees if you have your direct booking site. So you definitely want to do that. And so, and then when it comes to the articulating to your exact audience, yeah, you're just going to rewind a little bit and think, okay, what would that generational family look for? When grandma and grandpa are booking a property for the kids and the grandkids, what would they like that experience to be like for them? Right? Like, as a grandma or grandpa, I want my kids to be like when I'm a grandma and grandpa, I want to be like, everybody wants to come and hang out with me. So what would a property offer that everybody would want to come and be super excited about it? So you just have to, and some of that's the area, some of that's the things you can put in the property, whether it's games, whether it's making sure that there's adult spaces and kid spaces and they can be separate. There's also got to be gathering places that work. And so all these different things that you kind of go through that, kind of design that experience section. But 100% you're on the right track now. Now we got to, where you're thinking about that, now you got to go put it all together. Sometimes it doesn't happen overnight. Like I'll brainstorm exactly what I want to do. I had different ideas on this property, a number of different ideas that we went through before we landed on what we did.
Thank you.
Yep, absolutely. Caesar says, are you answering your own independent booking inquiries, or is your property manager? No, we answer all of them until they say, like you saw that conversation I showed you with Nancy, until they say, awesome, let's do it. Then I say, great, Nancy, I'm going to connect you with Serena. She's going to reach out to you on this number to finalize the booking. So we handle all of the communication until we hand it off. And just so you guys know, I've got a pretty full schedule. I do all this myself because it's not overwhelming. I have a total, like I said, I'm sending out a total of maybe a text every other day. And so all you have to do is go into your Profit Maximizer site and you go look at the conversations. Like I looked at the conversation live with you. I don't have any unread. I'll usually maybe have one or two every day. If I'm lucky, I have one a day, right? Conversation started. Usually it's one or two every other day. And so I would suggest you do it directly. You don't hand it off to anybody until somebody says, I want to book the property. Good question. Terrell and Kayla, where did you order your custom metal sign for the house that is hanging on the porch? We got that on Etsy. My wife just found that one on Etsy for us and ordered it, and turned out really nice. I actually don't know exactly where on Etsy, but she found it on Etsy. Christy, why don't you want to book them direct from your website? Also, what kind of insurance do you have to cover any issues that may happen during direct booking? So I've gone through that in pretty detail. Hopefully, Christy, that makes sense. We don't want to book them direct on our website just because it's not as effective. I would love to make that work. If I could send paid traffic to a direct booking website, I promise you we would do that. It would be way more automated. I have just yet to be able to make that work anywhere near as well as this process. When I built Vodyssey and when I put it together, one of the things this was one of the big things that we were doing 4 or 5 years ago, and I did it by accident with this type of a process. And I keep trying, and we keep testing direct booking sites because we would love it to be able to just send traffic to a direct booking site, but it just doesn't work. We have not been able to make it work yet. And so if we ever figure that out, you guys will be the first to know, because it makes it even that much easier, right? If it's all automated. Oh, and then the kind of insurance that we have, one, I have proper insurance on my property, which is why you saw on the analysis, my insurance is a little bit higher than some of you might be paying if you're not using proper. And that's a very comprehensive short-term rental insurance. We also use, now I'm going to screw it up, I think it's called Super Hog. And that is a screening company that screens our guests, as well as has insurance if they screw it up, and has any, so it's a kind of a double layer of insurance, that if they have a guest that they screened and said was a good guest through their screening process, and they end up having any damages, they actually have other damage insurance on there. A lot of members and a lot of people use Wavio as well. And so if you look up Wavio insurance, it's like one of those $59 insurances that you charge your guest, and that covers any incidental damage, I think up to like $3,000. And so different things, and we have layers of insurance to make sure that that stuff's covered. Mark, awesome ROAS on the ad campaign. Awesome. Thanks, Mark. Yeah, we're super happy. Any of you that run paid ads, a 7-to-1 ROAS is really good. And so that's, we've been averaging that for almost 4 years now. And so our average ROAS is somewhere right around 8. The back end, and that's on front end ROAS. Again, the back end ROAS is going to be way higher than that. Like, for example, when we run ads for Vodyssey, our ROAS is usually around 1.5 to 2. And so it's not like most businesses, it's very, very difficult to get that high of ROAS. So you should all be taking advantage of that because it's working right now. Rebecca, do you manage the website inquiries or the co-host? We answered that. We do. Nagazi, how do you determine city or municipal taxes? And again, I'll just, as we ask these, I'll show you guys where this is at in the course. So when we go into the classroom, where I'm going to in the acquisition phase, when you're starting to go through that locate section, is we start to identify different neighborhoods. If you go here, I have a detailed account of how you go through that, but you're going to start with the state. There's no states that disallow short-term rentals at this time. Then you're going to kind of look at layers of rules and regulations. You're going to then go to the county, then you're going to the city, and then you're going to go to the HOA. And that's how you find it. Avalara is a tax software solution. Avalara actually has a business licensing service that I just heard about, and we actually used it on this property to test it out, and it worked really great. And they actually go find for $300. They actually go search what business licenses and requirements are required in the area you're going to go operate a short-term rental, and then you have to pay whatever the licensing fees are, which is going to be a few $100 as well. But they'll go actually do that for you. But it's not hard. It's sometimes it can be time consuming depending on the city and county. But I take you through a detailed account of exactly what to do there. And step 3, understanding different neighborhoods.
And my question was a little different, but you know how Airbnb takes taxes for you, but if you're doing this, you have to do the taxes yourself. Those taxes, the city taxes.
Yeah, so Avalara is what we use for that as well. Now, Airbnb and Vrbo also, they're going to ask you where the property is located. They're going to know the tax rate in whatever area you're at. So your area is going to have a hospitality tax rate that should populate in those OTAs, but we also we use Avalara, which is a software to do that and be able to collect those taxes. A lot of your Nagazi, are you using a property manager? Or are you going to be using?
I'm self-managing.
Okay, so Airbnb, Vrbo, whatever OTAs, that should also help. But if you have a channel management system like a Lodgify, Hostfully, they will also have a section in there where you load in the county and the applicable taxes. And you can call the county and just ask them what their sales and hospitality tax are for short-term rentals, and they'll let you know what that rate is. Like you saw in ours in Gilmer County, it was like 19 point something. Most of the time it's between 12 and 14%. 19 is a pretty high hospitality tax rate.
Thank you.
Yep. Christy, in the meantime, while someone is inquiring about dates manually, do you also have it listed on Airbnb? What happens if someone else books those dates? Seems like there's a lot of back and forth and manual work. I'm not sure why it's better than just allowing them to book directly from the website. So yes, it's live until we solidify the booking. And it does happen once in a while where they ask about a date and we tell them it's available. Let us know if they want it and we'll finalize the booking. That's why I always use that terminology, like we need to still finalize the booking. Let us know when you're ready. And if it finalizes or somebody books it on an OTA in the meantime, then they lose it, right? Whoever books the property first, and it is listed on other places. I don't I used to tell people, hey, listen, we're listed on other places. It could book before you know, please let me know as soon as possible. I felt like that gets a little, again, too much back and forth. And it feels a little salesy too, to me. Like, it's just like, okay, let us know if you want to finalize it. Same thing could happen on Airbnb. You could be looking on Airbnb on the same property I'm looking at, and I book it, and you didn't book it. You're going to lose out on it. It's the same. So it's the same situation. And you're right. It does seem like a lot of back and forth. It's really not. You guys don't have to do this. I'm suggesting you do it because it's a good return on your time and money, and able to build your business on your own. And then I obviously kind of beat that horse dead on why we don't just send them to our direct booking site. And it's just it doesn't work for us. If anybody figures out how to make that work, I would love to hear it, but we've tested it a lot. And it's just so you know, I mean, when I say tested a lot, we've probably sent $15,000 to $20,000 of ads and paid traffic to direct booking sites over the years, at least. And so it's not like we tested it for a couple $100. We've got a pretty good test at different times in the market. I tested it back in like 2016, 17, before we had the COVID thing. It didn't work nearly as well as this did. I tested it during the COVID, the big spike when everybody, if you had a short-term rental, it was like having toilet paper. Everybody was booking everything. It didn't work then. That's when I got my highest return on ad spend, which was just barely a break even. And we just tested it again, and it just doesn't work. And so we got a negative return on ad spend recently. So that's the only reason we don't do it. Tonya, how do you find a good photographer who can take lifestyle photos? My current short-term rental is only real estate photos. And when you decide to scrap your own previous Airbnb account, when do you decide to scrap your? Okay, so first on the photographer, I would suggest you go through the training and like I'm a big proponent of Brian and Katie at Overlooked Overbooked. They do, it's a remote photo shoot. So somebody has to be there, and they actually take the photos, and you can do this yourself. They'll actually take the photos and of you walking through the property. You also can go through, and Katie takes you through exactly how to do a photo shoot on your own, and they will probably turn out a lot better than just a regular real estate photo. So you don't have to hire them to do it. You can hire them to do it, and it's a little bit more money, obviously, to have them do it with you and go through that process. But you're going to have, that's what I did. That's what I would suggest, but you don't have to. Katie takes you literally through the entire process: pre-production, production, post-production, and then editing and everything else that you need to know. So that's who I would point you to and suggest, because lifestyle photos are really difficult to get, because photographers, you either have, on one hand, we've tried like wedding photographers who are used to more lifestyle photos, but they don't know how to photograph real estate. And then you have real estate photographs that understand how to photograph real estate, but they don't know how to do any sort of any lifestyle type photos inside of it. And so it's a difficult mix to find. When we found Brian and Katie, we were super excited about that. When do you decide to scrap your own Airbnb listing account and start again, since there are better ways to raise the bar on a property? I would probably think of scrapping it only if I had bad reviews, or if I did a big remodel or changed. Like, if I'm going to change my property significantly, then I would probably start over from scratch. Or if I had a property that was getting bad reviews, you can get that traction even on a listing that's buried. And so you can still, I think that they allow you to run a promotion if you haven't run a promotion in a long time. I think they do allow you to run a promotion even if it's not a brand new listing. Double check that, but I think that you can do that. But even without the promotion, if you get a really good photos and you start getting some traction and people start saving that property and start booking that property, you'll be surprised at how fast you rise up to the first couple pages and maybe the first page. So I would only scrap it if I was doing a big remodel and the property was going to look completely different, or I had a property that was not doing very well and I was getting bad reviews, which in turn would mean I need to change some things about it and I need to upgrade the listing before, and then I would start off from scratch. Margarita said we talked about that one. Vanessa, how do you compete with people in this market that are desperate and charging $35 a night? We have a competitive market that has many owner hosts, and they just keep dropping the rates massively because of the 2023 market. I don't compete with them. It's exactly why I'm teaching you guys to do exactly what we're talking about. I don't try to compete with those people. If somebody wants to book a property for $35 a night, it's not going to be my property. You guys have to realize that there are people in every single market that will pay more. Not everybody is looking for the best price. When people are going on vacation, one, they're spending a lot of time. That's the most valuable asset and resource that most people have, and they will value that. There will be a lot more people that value that, and they want to have the best experience possible, not always the best price possible. And so I've learned that over the years with everything we do. How about my coaching program? You guys are all in here for $10,000. There's people who coach this for $500. There will be people who pay for value. There will be people who pay for a better experience. You should be thinking the same way with your properties. It was never a race to the bottom. And when people start racing to the bottom, you're not going to win, and you ignore them. They're playing a different game than we're playing. And so unless you can make money at $35 a night, I would ignore the $35 a night ones, and I would focus on doing what I need to do to maximize and optimize my listing to get the higher rates. Is there going to be a rate that you're probably not going to be above? Possibly, because you're going to go here and you're going to see this range of rates here and saying, okay, I might not be able to, because I'm doing everything Sean's doing, I might not be able to get $3,000 a night just because I want it. But this market is between $170 and $600 a night. And so as long as I'm within that range of what people are paying for, then I should be confident to play at the top of the game. And it's a lot easier to play at the top than most people think. It's actually a hell of a lot harder to operate in the middle or the bottom, because it's way more crowded. There's more people that are willing to do that. And so the way we compete, it's a great question, because exactly the way we compete is exactly what I'm telling you to do here, and being able to articulate the experience you have to offer, and people will pay for that experience. You ignore the other people. I don't ever pay attention to, when I go on Airbnb, I don't even look to see what other people are charging. I don't care. I care that the market is willing to pay what I'm charging. It doesn't do me any good to pay any attention to the low end of the market unless I'm going to compete at the low end of the market. I will pay attention to the top end of the market if that's where I want to compete. And so, one, don't focus on it. Focus on what it takes to be at the top of the market, and ignore the people toward the bottom of the market. $35 a night, not a chance in hell I'm renting any of my properties for that. Every property is going to have a bottom that you guys should think and not rent below. There's going to be a price on every single one of your properties that you're like, okay, if I don't get a booking for X amount, I don't want to rent my property. It's not worth it. One, the quality of guests is way different. The people who are paying for the experience and value their time want to say, hey, listen, I'm taking a week off, or I'm taking a weekend away with my family or my friends. I want this to be awesome, not, hey, I just need a place to crash and I'm looking for the cheapest possible place. If I'm sleeping on the floor, I don't care. I just want that. That's not the guest I want, right? That's not who I'm looking to. I'm not trying to tell any of you guys to go into this market to do that. There's no reason you should pay me to go through this course and follow this process if that's what we're going to talk about doing. Eric, do you ever send a follow-up text or emails with videos from guest experiences throughout the year to remind them you exist? With a 15% discount, does this hurt your ability to push your average daily rate to maximize your profit? Eric, thank you. I totally forgot the last part of what I was going to show you guys. And so, yes, at the very minimum, you should have a quarterly newsletter about fun things to do in the area. It's not difficult to put together a newsletter with a few things to do in the area for 4 times a year, every quarter. So I just showed, I'll bring over the one that we just sent out on this one. So we have all those, like, right? What if I only am getting 17 people requesting quotes and I've got 480 people to talk to? I want to have a quarterly newsletter, and we show you exactly how to build these. You go into the automations and you put together your marketing automations. We've got our marketing up here. I've got templates in here for your newsletters. Let's see here, pull it up. Am I not in the right one? Okay, I'll just get to the newsletter here in a minute. It's in our marketing emails. Oh, there we go, templates. So I've got in here, I've got my quarterly newsletter, and I call this the North Georgia Adventure Guide. You can get more creative than that. The area that we're in is the North Georgia Mountains. Most of our market comes from Atlanta. They don't typically say, sometimes they say Blue Ridge. They don't say Cherry Log and LJ and Mineral Bluff and all these areas. They just call it North Georgia. They call it the North Georgia Mountains. So we decided to have the North Georgia Adventure Guide. Where did my guide go? So it's an email newsletter. And I want to show you what it is. So one, we don't remind them, Eric, to say, hey, remember me at the Lakeside Treehouse, remember this, or anything else. I want them to think it's kind of like a travel blog, right? It's like a travel guide, a travel blog. And I want them to think it's from a family. So one, I say the North Georgia Adventure Guide, and I'm doing winter 2023. So we do winter. The first thing I want them to see is the Moore family. And we talk about our love of travel, how that led us to Cherry Log, why we love the Blue Ridge Mountains, and we decided to share our favorite things to do each season, hoping to inspire others to visit this magical area, right? I'm not really advertising my property. I'm saying, hey, travel bloggers and travel, like newsletters and stuff are popular. We want it to seem personal because they'll keep following it if they say, okay, I kind of like the personal touch rather than just kind of a corporate newsletter. So first thing we do is we tell them about us and why we're doing this. Next, we pick 2 or 3 things in the area that are going on right now. I told you guys this is a big apple orchard area and it's a big vineyard area and then a lot of hiking. So we're going to feature a couple of things. This one is one of the Mercier orchards. It's of what's going on. They're having on, let's see, February 25th, they're having their 80th anniversary. So we went and just found things that are going on during the winter, right? Why would they come during the winter to an apple orchard? Well, they're doing this big celebration, 80 years in business, veteran owned, local family, like they're going to have this big thing. So we tell them a little bit about that. We link that on there. The next thing, we always are going to have a restaurant that we're featuring. We tell them one of our favorite restaurants. And when you go there, or when you're writing about this, you can talk about the restaurant, but then also have a sentence or two about us, right? This is one of our family's must-visit restaurants on every trip. However, plan ahead, get a reservation because it gets crowded. We're going to tell them a little bit about it. We're going to show them photos about that, and then we do a featured hike. So for our adventure guide, we're going to feature a vineyard or an orchard. We're going to feature a restaurant, and then we're going to feature a hike. That's what people do in this area. And so it's very simple. This was the Toccoa Swinging Bridge hike. It's the largest swinging bridge or suspension bridge east of the Mississippi or west of the Mississippi. I don't know which one of them. So I have to read through it. But we went on our recent trip. This gets really, really crowded in the summertime. So we went and took pictures of us on this bridge in the winter. It was a rainy day and we still had a lot of fun. And I even said this hike can get very busy in the summer months, and why we love this hike during the slower winter season. Sometimes the trail can be a bit muddy and slippery in places, so wear some good hiking boots, take your time enjoying the scenery. Super simple, right? People are happy to get this stuff. They don't feel like it's spammy. They're like, okay, that's kind of fun. I already asked. And then the very last section will always stay the same. Visit Lakeside Treehouse, talks about what we're doing. And then the links I'll take them to down here. The link takes them to our website. These links take them to maps of the hike, takes them to the Black Sheep restaurant, or takes them to the Mercier Orchards website. So super simple. And yes, we do want to do that on a regular basis. At a very minimum, do it quarterly. We sent this out. I think I sent it out. Let's see when I sent this to myself, January 10th. So we sent this out January 10th. We ended up getting like 5 or 6 requests for bookings. Unfortunately, by the time we sent this out, all of the bookings were for dates that were already booked. And so we ended up getting some, but it's okay. We're communicating with them. They're going to get used to hearing from us, seeing from us. And ultimately, that's why that back end ROAS will continue to go up, because now we're reminding them, hey, we're still here. And this is how you end up getting those repeat customers as well. People who stayed in your property are going to be like, oh yeah, that was fun. I remember that. And they'll start following that. So Eric, yeah, thanks for asking me about that. We do build that out and we do automate that. Again, just as more promotion for the people that we already paid to have in our system, without spamming them, telling them too much stuff. If you have different things throughout the year, you can also sprinkle in a promotion you're doing, or, hey, listen, we just had this weekend just got canceled. It's almost always filled. Is anybody interested for this weekend at this price? You can do that on last second bookings, because I've got 480 people I can talk to. Somebody will take you up on it. When COVID hit, you guys, I was doing this on a property in St. George when COVID hit. I just started running the ads. I only had about 80 people on my list when COVID hit and everything shut down. Airbnb VRBO refunded everybody's money. Our management company couldn't take any reservations because they were only operating on Vrbo. And so we actually sent our list out and said, hey, listen, we've got everybody canceled. Our property's open. St. George, Utah is open. The resort's open, the amenities, everything else. If you want to book, we're able to book it direct. Let us know. We filled up for all of March, the rest of March, which was only a week. And then in April, because this happened like the end of March, all of April filled out immediately from an email that we said that to, because we had 80 people to talk to. Right? A lot of you will, in 30 days, I got 480 people to talk to. So you can fill in the gaps really easily, as long as you don't overdo it with promotions too often, right? You want to make sure that most of the things are like that North Georgia Adventure Guide, something valuable about the area. James, which part of the new course do we go to for the details for hiring Mike Whitfield's team, overlooked teams? Great question. So you guys, any of our expert advisors that are on both the calls. So all of our expert advisors have their own weekly call. You guys can get on any single week with the paid marketing with Scott. You can go tax strategies with Mike and Kevin from Pinecode, designing the experience with Mike Whitfield, and then maximizing your listing with Brian and Katie. Every single week, they do a live coaching call that you can get on. You also, in the classroom, every one of them has their own course about going topic specific above and beyond what I go through in the masterclass. And so any of these places you can get information. When you go to like Mike's or Brian's, like if you go here, they will have booking, look at booking and assessment. And how you can get a hold of them, what that entails, what that is. Mike has the same thing. So after their course, they will have contact information if you want to reach out to them. And so always just go into the classroom and you'll see topic specific training from them. They have their own live coaching call every single week, as well as their contact information if you want to hire them further. Every one of them, I've asked them, anything they do for you a la carte that you can hire them for, I wanted them also to train you on how to do it yourself, because some of you like to do stuff yourself as well. Lena, the rest of the conversation, you will have those that did not book throughout the year. Is it automatic emails? Yeah. What do you send them so they don't feel spammed? Exactly what we just went through there, Lena, on the on our quarterly newsletter. And Ruiz, let's see. I would like to say this was a great coaching call session. Thank you for all you. Awesome. Thank you so much. I appreciate that. I'm hoping you guys got some value out of this and seeing that whole process. So, Noel, what do you do with the old furnishings since you gutted and furnished it your own way? I donated them. There was a local church in the area that one of our members had known and knew about and let me know about and said that they could really use it. And so we ended up donating all of it to them. You could sell it, you could do whatever you want with this. In our case, we had a member that was local to the area, was awesome, actually helped us coordinate getting everything out and with that church. And so that's what we did with this one. But you could really do whatever you want, even to the point of selling it. It was all good stuff.
Hey, Sean, can I say one thing about getting rid of your stuff? This is Mike.
Yeah. Hey, Mike.
So when you're trying to get rid of your stuff, there's kind of a hack. If you use College Hunks Hauling Junk, don't use their junk removal service because they charge you by the truckload and whatnot to basically fill up a truck and dispose it. It's very expensive. And I've heard a lot of people use that. What you want to use is the College Hunks Hauling Junk moving service, where they basically charge you by the hour and they'll come pick up all your stuff and you ask them to move it to a donation site like Goodwill or a church or Salvation Army. If you use their disposal service, they say that they're going to take it somewhere, but 9 out of 10 times they actually just go to a dump and trash it. And you pay premium dollar to fill up the truck. They literally charge you by the linear and vertical foot to fill up a truck, and it can be super pricey. We had an experience where we literally were using both of their services at the same time. And we had the moving guys there for 2 hours transferring stuff, and it was $600. And the guys came and picked up literally the same amount of stuff to dispose it, and it was $1,450. So little life hack, move your stuff to a donation. Don't hire a junk removal company because they charge a premium.
Nice. Good tip. Great tip. That's Guys, that's why we have these guys around too. Appreciate you hanging out with us today, Mike. You heard me talk and show some of your handiwork. So hopefully I did a good job.
It's been
articulating it.
great. This project was really fun to work on. And there's so many little Easter eggs in this house that Sean didn't even touch that the listing alludes to, that is even more exciting when the guests show up, that they get to experience, because you get them there and then you don't just leave them wanting, you give them even more with little Easter eggs, and this house is full of it.
Yeah, and that's what's key, and we touched on that a little bit, that you want them to, again, you have to have a listing that is optimized enough and great enough to get them to come to your property, but you also want them to be wild when they're there. Not like, okay, this is what I was expecting. I want somebody to walk into my property and be like, holy crap, this is way better than I was expecting. And we specifically go through, and Mike did an amazing job of this, of like those little Easter eggs that they're going to find throughout. Like it just, even down to the details of like those lamps. Somebody even mentioned the lamp in our review. Little things that are really cool when you go through the property that you don't really know until you're there. And so it's a lot of fun. Let's see. Robin, why do you think the direct booking site doesn't work? Robin, I really just think it's because people have the time looking for a property is so long, and people look at so many different properties, and most of the time they just don't remember, right? There's a lot of properties start to merge together in your mind when you're looking at so many, and a lot of times I just think that that's one of the reasons. You're giving them everything they need and there's no communication started. And so imagine even if your property was one of the top 5 that they found, and they're like, hey, I think all 5 of these properties would be awesome, or even the top 3, but one of the properties was actually communicating with me, and I was talking to the owner, and I felt like it was like their home. Like, I feel like that the personal touch to that is so much better than just the sterileness of a direct booking site where you're not doing anything. You got to remember too, a lot of people are nervous about booking a property or booking somebody else's property. We're not as nervous to book a hotel room because we know what to expect, right? There's even though it can be very sterile but we know the predictability of what it is. If I go to McDonald's, I know what I'm getting. If I go to a Marriott, I know what I'm getting. Short-term rentals are a little different. There's a little bit of a risk booking somebody else's property because you don't know who you're talking to. You don't know what you're getting. And I think that the direct booking site takes that aspect and makes it a little bit more corporate. We want it to feel like, hey, this is our home. Like you saw that lady that booked our property. She said, awesome, let's do it. I said, great, I'm going to have Serena call you. And she says, I promise I'm going to take care of your beautiful home. Like, that's what I want. That personal aspect and that personal touch seems like a little thing. I don't believe it's little. I believe that's a huge thing that is missing in a lot of these in these transactions. And I think that's why this works so well versus a direct booking site, is because there is a personal touch to it, because they are talking to me as the owner, because they know that I care about their experience, right? By how I'm communicating with them. And so I think that's why it works so much better than direct booking sites. Ngazi says, this has been really great. Thanks, Sean, for being a great mentor. You're absolutely very welcome. I couldn't imagine doing anything. If I had to choose anything to do, this is what we would do. So I appreciate all of you for spending your time as well and taking this serious. This is such a fun game to play, in my opinion. And I love when I get to talk to people that do take this serious. Tonya, do you have contacts for co-hosts for Utah properties? I don't, Tanya. I don't have, the only Utah property I have is in St. George, which is 5 hours away from here. And so I really don't have any in this area, but they're not that difficult to find. Again, go to the top properties on Airbnb, start there, and you'll start to find them more and more because it's becoming a lot more popular for a lot of people to do that. Nicole, I don't see your property when I go to Airbnb and look up Cherry Log, Georgia.
Never mind, found it.
Found it? All right, good. I was gonna say, I just pulled it up. Let me find it again.
I know, that's why it made me think that it's different for other people coming in.
Okay, did you? Yeah, so every time I check it on, and I always try to check it on that incognito window. And so you did see it?
Yes.
Awesome.
Found it.
Okay, good. Tonya, what are all the OTAs that you use? Do you have a treehouse on just Airbnb, or will you be adding it to other OTAs? Do you have a process for adding More of them, yeah. So I do believe we are starting to get on Verbo. They were a little bit delayed on Verbo, but I do know my co-host is planning on getting on Verbo. I actually haven't seen the Verbo listing yet, so I may not be live right now. I'm only on Airbnb. Those are the only two that we'll get on. But I do know that she's planning on putting on Verbo as well.
Are you relying on your co-host for the pricing on that? Because it's different.
On Verbo versus Airbnb?
Is it different or because
No, it'll be the same. It lists it different. It'll list it different. Like when you go to like this number here, where it shows, let's see if I go to, let me just pull up a property that's going to show me a price. So you know how right here on a new listing, it'll show you the 561.
Yeah.
This price shows different on Airbnb and VRBO, but the actual price to check out is going to be pretty similar. All she's going to do is put it in Price Labs or the channel management system that she's using, which connects to Price Labs. And then that channel management system is going to push that price to Airbnb, Verbo, so that we end up getting the same net price.
Okay.
So
Sean, so on that VRBO and Airbnb do charge the guest and the owners a little bit different prices, percentages.
Right.
The VRBO does usually, like Price Labs, you can adjust it so that your Tanya, so that your price in VRBO is slightly higher to compensate for the extra fees so that you are getting the same return. But typically my quality of guest is a little bit nicer on VRBO. So I'm willing to take a little bit of a paid check because I think people often will compare side by sides. They'll pull up both Airbnb and VRBO and they'll pick the cheaper one. So typically I take a little bit, like I think it's like 2 or 2.5% less to get that Verbo guest than my Airbnb guest.
Yeah, and that's a good point. Like I know, like I want it set to where I net basically the same, but that could be a different price ultimately to the guest depending on what platform they choose. And so they can decide. And like Vanessa said, she might say, hey, I'm willing to take a little bit less on Verbo because I've found that my guests are higher quality on Verbo. In my case, I'm going to keep it the same on either of them because we've had really good guests on both platforms. But I know that some hosts are going, or, and you might find this in your area that the guests are a little bit higher quality on one platform versus the other. It's not, when somebody says, hey, I saw it on Airbnb for X and I want to book it on Verbo, I'll say, go book it on Airbnb. Because I'm going to make sure I net the same because the fees they charge, they're two different companies. They're going to charge different fees, different things are going to be passed through to the guest, different things like that. So I will make sure that if they're really communicating with us like that, most people, I actually haven't had that scenario, but if they did, I would say then go book it on the platform that you get a better price. Because to me, the net's the same. That's how we set ours up. So we're going to have the same net.
I found the same thing that Verbo guests tend, but I've had fewer of them, right? So
you might prefer Verbo over, and you might want to optimize on Verbo if you feel like they're better guests. A number of our members, actually, not just one, a number of our members don't even put it on Airbnb because they want to be on just Verbo because they feel like that it's a better quality. So they're only going to optimize on one platform. And so that might be a decision that you make. Nothing wrong with that. I actually think that if you're making a business decision to optimize an OTA, I do think it's really good to go deep on 1, 2 at the most, and those 2 would be the most. But I would typically choose one or the other and really optimize on one.
Okay.
Yeah. So that's a good point. And you may choose to not even put it on Airbnb. You may choose to, hey, I like Verbo better. I'm going to really do what I need to do to optimize on Verbo. The optimization technique is the exact same. You're going to do the exact same to optimize on both of them.
Mm-hmm.
Awesome. Let's see. Rebecca, what was your process for narrowing it down to 3 markets and what were your big picture criteria on selecting the house to buy? So we talked a little bit about this in the very beginning, Rebecca. I wanted mountain markets. I wanted water. And so I looked at some different markets that could go out west, just markets I was familiar with. I always tell you guys to select your markets based on where you want to own vacation homes. That's exactly what I did. I narrowed it down to 3 markets that I wanted to own a vacation home in. And so we ended up deciding that. We were making offers. Again, I was making offers for about a month and a half. 2 months I think I made about 45 offers before we had one that actually worked. We saw a lot of different properties. The criteria I had was these 3 markets. I wanted to be on water. I wanted a 3-bedroom. And so, we're looking at and limited on inventory. So just selecting the house that we ended up buying ended up just having to be, okay, will this work for what we were looking for in our personal property goals in the market we wanted? And that's how that very simply, same process I take you guys through. It was not based on the investability of the market. I was not looking at it strictly as an investment buyer. I wanted to buy in a market that I wanted to own a vacation home in. I knew this market was going to be a challenge to maximize and optimize as far as the dollar amounts I needed to get. Not that the demand wasn't there. Demand is definitely there in these markets outside of a major metropolitan area, a really popular area, but it's a saturated market and revenue was not as high as I'd like it. And so we knew that was going to be a challenge, but that wasn't the reason I decided to buy in this market, because my buying criteria, I wanted to own a vacation home here. Christy, thank you very much, Sean. I appreciate your thoroughness, and I can feel how much you want to see us all succeed. Looking forward to next time. Absolutely, Christy. Thanks for joining us here. Caesar, is your direct booking site the main way you capture emails? How can you capture emails from people booking through Airbnb? Yeah, Caesar, it is the main way that we capture emails. We don't focus on capturing emails from the people who book on Airbnb or those sites outside of using StayFi. Some of you have asked us what StayFi is. In our properties, it's a Wi-Fi system, and all it is a router system that is similar to, think of it similar to when you go check into a hotel and you use their Wi-Fi and they ask for your name and the room number and you have to agree to their terms, right? And so that's what StayFi is. We put these in our property to use our Wi-Fi. It says, please put your name, email address, and then check that you're over 25. If you are or aren't, you can still get access, but I want to know, because that now collects their information. Everybody who logs onto my Wi-Fi, I collect their information, and that doesn't matter whether they booked on Airbnb or anywhere else. So StayFi is a system that allows us to collect information from people that stay in our property that come off of those OTAs. Now, we ask if somebody's over 25 or not, because I want to, in this case, where most of our guests are adults, some of our properties, you have kids that want to use the Wi-Fi. I just delete them out of my contact system because I don't want to send them my newsletters and things like that. They're not booking. But if I have a 4 or 5 bedroom home that is a family home, one person connects or pays the bill through Airbnb, I actually will collect information with StayFi from all of the adults because everybody wants to get on the Wi-Fi. And so that's the system we use if they come off of it. But our direct response system that we really focus on is just our lead generation through Facebook and our own website. Margarita, how do you protect your assets from litigation, from bad guests on your property? So it's asset protection. It's layering on insurance policies. It's layering on LLCs. It's layering in I have layers of asset protection. And I have layers of insurance, like we talked about. I've got damage insurance. I've got screening processes that have their own insurance. I've got short-term rental specific insurance on my property. When I have properties, if something major happened, let's say somebody was out and drowned in the lake, something major staying at my property, I've got an insurance policy that is going to cover, but also that might max out at some point. And so I've got these properties in their own LLC. And once they have a certain amount of equity, they're in their own LLC. The way I structure mine, I have an LLC for every single state that I own properties in, and I might have multiple properties in that state, and they will stay in that state LLC until my number is $500,000 or more of equity. I will have them in their own LLC. But then I have another layer, and I've got an asset protection holding company that I actually have that holds my LLCs. And then I've got a trust that holds that. And so I've got a limited liability partnership in Arizona that holds all my LLCs. So I've got layers of protection should something happen in our property on both insurance as well as my entity structure. When you start building a significant portfolio, and I don't want all my properties at risk. I mean, if I have millions of dollars in properties in equity, I don't want something to happen at one of them and I lose all of it in all the rest of them. So you have to, those are things that, that seem a little complicated. It's not, as you start to layer on and do that. And if you want to understand kind of equity structure, you guys go to the classroom here and go into the master class, go into recommended partners, and I've got asset protection attorney here, and I've got a nice training from my asset protection attorney kind of explaining that. And so you go down there. Again, we try to have anything and everything you guys need in there in the training. But Doug Lobmel and I spoke for about an hour on this topic and understanding asset protection tools and planning for your future there.
The reason why I'm asking is because ever since we signed up with you, we're getting a ton of emails from asset protection specialists. And I started looking at that, and it just seems like there seems to be a formula for short-term rentals, just as you mentioned. So what I'm wondering is, I know I'm going to go in here, and if it's redundant, then, forgive me, but do you have a specific place where you kind of have a list of things to consider?
Yeah. So when it comes to asset protection?
Yes, specifically when it comes to asset protection. The things that I'm concerned about is exactly what you said. Your house is on a lake. Our home is on a lake. The first inquiry that we got was, is our property fenced? So that kind of triggered, I think I need to respond appropriately. And so I did. I mean, we also back up to a national forest. There's wild animals that come up to the backyard. So these are the kinds of things that I think it's really important to put in your, not to deter people, but kind of to protect yourself. Somebody drowns in a lake, someone gets hurt by and you said, no, it's not fenced, but you didn't give more information. Yeah. So I guess what I'm wondering is if you have anything like that in any of your master class where I could go to it easily.
So one, use logic, first of all, like on this one right here, on other things to note in our listing, we put down here, the walk down to the lake is steep, but worth it. And so we wanted people to know it's a steep walk. We're going to warn them, like, hey, if you have animals, hey, walk down to the lake is steep, be careful. Other things to note, Wi-Fi speed, anything negative you can put down here in your listing and warn people about. Wild animals, put it in there. When it comes to asset protection, for sure, what I would do, where did I have that? Go to the master class, go down to the recommended partners in the asset protection attorneys, and then watch that training. Doug does a really good job of explaining the layers and the things that you need to think about. And usually it's accidents, right? It's things that happen very rarely, but when they do happen, you want to be protected. And so Doug does a really good job of kind of the checklist of things that you should be thinking about throughout this conversation that he and I had.
So are your properties in the name of an LLC? I guess the question that I have is, your websites show your family, your name. If somebody Googles you, they can clearly see that you're part of a bigger entity. Yeah. Like, I'm just, I'm not even thinking about the accidents. Accidents will happen and you've got ways of protecting yourself, but there are just those bad people out there that just look for something.
Yeah, for sure. Like you're saying, I kind of have a target on my back. Many of you will. We're putting ourselves out there, right? We've got a lot of assets. We've got businesses. We've got all these different things. That's exactly why I have this in here on that asset protection. Yes, I do have layers where if somebody came after me, it would be very, very difficult to get to anything I have. And in fact, Doug even makes the point when he and I are talking, like, this stuff is set up. This was originally put together by people that were bad people, that were doing things wrong, that were really breaking laws, and this system protected all of their stuff, right? And so, not that we want to do anything wrong, but there are people, we live in a very litigious society, and if you have a target on your back and they think they can get something from you, they're going to go after it. Where the way that our stuff is set up, it's very, very difficult for anybody to get to anything that we own. And so there's a lot of layers to that. And Doug's the one that set my stuff up, and I set it up exactly how he's kind of talking. Like, I've got a bridge trust, which is a different type of a trust. I've got an asset protection, limited liability asset protection company in Arizona. I've got property LLCs that own all of my different properties. I've got company LLCs and different things set up that way. Everything connects where I own it and control it all. But at the same time it's all very insulated and protected in their own buckets. And then there's layers above that before you'll ever get to our stuff, right? It's kind of that control everything through your entities, but you really own nothing.
Yeah. And again, the reason why I'm asking, we went through this with our own attorneys, but it seems like general attorneys don't
Nope.
don't go this deep.
No, they don't. They're not going to, and that's just not what they do. These are and you don't necessarily need to go to that many layers right out of the gate, but you should be thinking about how you're going to set it up. And so I really suggest you watch that training in there, and where you and Tom go through that. It'll be eye-opening for you on how one, exposed some people are, but also how you can really set it up to protect yourself. And there's ways to definitely do that.
And the last thing is, are we able to work directly with some of your partners?
Yes, all of them. Yes, all of them have, at the end of this one, Doug will say, hey, if you want to get a hold of them, you can reach out to them and talk to them. So all of our recommended partners, I always tell them to share their information so that you can actually reach out and use them.
Thank you very much.
Yep, absolutely. Okay, let's see here. Keep going. Tonya, can we email Vodyssey to ask for assistance for a few limitations? Yeah, definitely. Always, if you guys have questions or sticking points, email Vodyssey. Always jump on the coaching calls as well. But you guys have multiple ways to get support for sure. Nancy, thank you. Fantastic information. Eric, thanks. Sean, great call. Thanks so much, Sean. Awesome, guys. Appreciate you all joining me. Robin said I meant booking directly on your own website when I said direct booking. Yeah, we've tried that, Robin, and we actually we have tested where we get their information and then we send them to a direct booking site after on page 2. Like, so at this stage, let's see, where's my Lakeside Treehouse? Did I close it? There we go. So on this page, if I go here, we've tested this, Robin, and we do get a little bit better return on it in investment. We're right there. We get their information. We send them the 15% discount code, but then this page is actually the direct booking page. And we have done that. And we have gotten a little bit better response than sending them here directly, but still the best we've ever done is about a 2%, 2.5% or 2.5 ROAS. So still not bad. You can do that. And we actually do have some members that do that because they're like, I just don't have time to, I feel like it's going to be overwhelming to have that communication. So we do have some members that do that. But again, you're only capturing those people that are like, book now, I want to do it right now. But that works better than sending them directly there. You do it on this page if you're going to do that. And Scott takes you through in the masterclass. Scott does take you through that option. And so when we go here and you go into the classroom section on the paid ads section, Scott will take you through that option of if you want to do that and showing you how to do that. Terrell and Kayla, looking forward to getting to the asset protection module. Thank you for including that in the masterclass. Absolutely. It's good. It really is great information and set up correctly. Again, you with layers of insurance, with layers of asset protection, and you hire the right people to set it up. You just don't, you shouldn't, it's not something you guys should be worried about. You're building a portfolio, you're building assets, you get the right asset protection in place. Now all of a sudden you just keep going and building and growing and having fun with everything rather than worrying about something that's going to happen. If something happens, we deal with it and it's no fun, but when you're set up correctly, it's not going to be devastating. It shouldn't be devastating. It shouldn't be at least financially devastating when something like that comes up or happens. So guys, that's it. That's what I had. I got through it. We got through the case study. We're going to post this in the masterclass. I'm actually going to put it at the very beginning, right in the welcome section. So you guys can go review anything that you want to review. We battled through that entire process. Those of you that are watching this, the recording, I'm sure that a lot of your questions were answered. If you have any additional questions, jump on our normal coaching calls. We'll get them answered. But that takes you through the launch of our most recent property. And it's been a really great launch. And we're really excited for this year with the property and everything that's going on with it. So appreciate you all for joining me live. We will wrap it up today, and then we will see you again on next week's call. Obviously, you guys know our expert advisors always have their weekly calls as well that are very topic based. So if you want to dive in to more of the details with design, with photographs, with paid advertising, with taxes, any of that stuff, make sure that you jump on their topic based calls. They're very, very generous with their time and their answers. And then obviously you guys can work with them in the future if it's something that you want to get a little bit of extra help with. So we'll wrap it up. Cheers. You guys make it a great day. We'll see you soon.